So you're gonna have to pay attention to this, which we talk about it every single week, and this is what I watch every single day. Okay, do we have a higher bar for the day or not to see like, okay, what we can make for the day? I mean, are we just gonna chop around like this in the inside bar? This is the most horrible bar to trade. Even the GAN said the same thing. There some of you, there's some new guys here as well, and some of will be listening later. These are the most these are the most terrible bars to trade, inside bars. The inside bars that doesn't make them any because the previous high was 233.08 and this high was 224 and the previous day low was 218 and then the price just didn't really move in either direction. It just stays within the previous bar. Yeah, this is very difficult to trade with, especially with options, even with any stock that you are trading or we are trading. You gotta ignore this. I mean, you don't know this until noon, kind of. I have a because I watch market every single day as like the rest of them. But if by noon, if I'm gonna see an index is kind of like chopping around, I will have a pretty good feeling that we're just gonna end the day with the inside bar. You just gotta. These are very tricky bars, outside bars that engulf, and the inside bars. You wanna go up, you need higher bars. Okay, that's the high. The next day you make a higher high. Next day you made a higher high. Next day, this is what the how that's how the trend goes. So this is where the swing turns down when you have three lower bars. That's one, that's two, that's three. When you have 3 days of lows like this, the swing is going to turn down. That's what they call 3 bar swing. So when the 3 days passed, and now for swing to turn back up, you need three higher bars for this swing to turn back up now. So in this case right there, we don't have any. As you can see, we don't even have any green bars. So for Monday, we're going to start the week because Friday high was 432.08. So we need where we close 428. So now we need to take out this high to at least have one higher bar to at least get rid of this nightmare that we have 6.6% decline. And then from here, we had this VWAP sitting right there as well. That is going to trigger some resistance as well, just like here. So there's 428 to 437. Okay, so we have a bit of a pocket here, as you can see, and then the low was 421. This is crazy price action from the last 3 days, to be honest. This, these 3 days, this 3 days, and this 3 days. But again, I'm glad the week is over. I mean, I cannot mm, sit and call and make a case like, yeah, these are all the market tops right there that we're seeing, you know? I mean, like just mark them like this, like, oh yeah, this is the market top on this one, this one. You cannot. There's no way that you can say this. Just it's just too early. I mean, well, this is what it is, and we're just gonna have to see what happens. Short-term gain. Yeah, well, yeah, because you have to look at it. As you can see yesterday, right? We had the OPEX. Look how Tesla and Meta took a flush right into a close. That's where the shakeout happened the last 5 minutes. That's where a lot of those options would, they expires. And Nvidia was I was watching. I was like, this thing is holding tight. And they got a bit of a spike right into their close as well. So Nvidia is good. I like Nvidia. The reason why I am this right there, okay, this is nice. This is this. I wouldn't. I had a bad trade. This is what it is. What it is. I mean, I'm just gonna, it was. This is bad. This is very, very bad. I mean, this is the weeklies even look horrible. This is not a buy. I mean, it could pop like couple points. But no, there's no turnaround story in this one anytime soon. Um, Netflix is kind of weakening right there. See, Meta just coming all the way back down here as well because the communication sector, okay, this one has your Netflix, Meta, and Google. Google is really good. I like Google has really nice. Look how far away it is from the benchmark as well. So these two right there, okay, and we'll take that breather. That's why I put that Meta into that second because you have a completed thing right there, right there. Because Meta had this. This is the post tri. This is the triangle right there, right? So you got A, B, C, D, and E. And after the post triangle thrust, we're able to complete an A, B, sorry, one, two, up and three. Here's your four. And then we got the one final push back to the upside. And look where the the high was 430, so sorry, 638, almost to the penny, right at that 161 point. This is textbook print right there, you know? So this is some sort of a expanding. Yeah. One, two, three, four, five, two, three. Yeah. So this to me, after this post triangle thread, this five waves are completed. So if these five waves are completed, now what we look for? We need to look for a counter trend move to the downside. So from here now, from for Meta, what we can do, we can take as a one, two. There's your three, because within a three, you have to find at least five smaller waves like this. Your three is very, it cannot be the shortest wave. I always tell you, and I see so many wave counts that guys make. It just, you have to do it right. If you're not going to count this thing, it's gonna cost you a lot of money. Okay, so because your decision are based, you taking your decisions based on a wave count that you are drawing on your own, right? And and now you decide to say like, okay, yeah, this is my wave count. This is where I'm going to go into, where I'm going to open up a position. And that would, this is the upside that I'm looking for, and this is the downside that, you have to make sure your wave count looks good. Because I know a lot of you guys don't know much about Elliott, and some of are trying to learn. And and I do it. I mean, I try to do it right. I mean, just don't rush. That's the only thing I can do. I mean, if this is Elliott is very time consuming. Okay. I've been doing this thing for a very long time, from a currency market to stock. I've traded currency for 8 years, Forex market. That was all Elliott there as well, on all the different currency pairs. And then into stocks. But the price is about the same thing, it works either way. You could give me any price, I can label it. I mean, but you just need to learn how to label everything. And you're not going to learn this thing in a matter of couple weeks or couple months. It's going to take you several years. Okay. Um, if you have the interest, and if you have if you're passionate about like, the principle of Elliott wave and think like, hey, this is the strategy that I wanted to adopt, and this is what I wanted to improve over time, and this is what I like to do. I mean, that's, there you're gonna have much better odds of learning and get better over time. This is all practice, you know, because the thing is, this is if if you try to count something because this is the low, right? And now if the price trying to move back up, now if you move one here to here, so right away from here, you can say like, okay, well, your wave one right there cannot be a three-way move. So if you do this, and then if the price starting to come to this area right there, all your upside projections will be wrong because the ratio will change for your three versus one, right? So you gotta have to make sure you have this is where the rules comes into a play. Wave one, you gotta have to have five waves. This is what they call it trend waves. It could be a diagonal, it could be a five waves to the upside. So in this case right there, you can make it as a diagonal. This is valid. You have one, two, three, four, with an overlap with one, didn't retrace below two, up in five. That's your five waves right there. That's your three right there. So you have five waves up, three. This is what makes the trend. And now here's your retracement for two is right to the 50% mark. Meta works really good with fibs. It's a very steady stock. Nvidia is another one. Meta is another one. I mean, there are some certain stock like when I will like if I will come across like I label a lot of wave counts. I mean, I don't really do much Elliott how I used to do, as you know. Um, but there are certain stocks that they works really good with fibs if you count the wave right. They'll give you those textbook prints. You know, it's like here. Look at the low here. The 100% fib was 549.07. Look at the low, 549.05. You see how good Meta trades? Look at the top right there, 161. This is our golden ratio, right? This is the ideal target that I am after from God, how many years? It's just to get to 161.8. Once you get to that mark, then you say like, okay, now I wanted to go up to a 200%. Or if the 200 passes, then we get to 261.8. These are those three upside targets that we're trying to get to if the price going to extend to the upside. So on the downside here now, what we can make the case is can count this thing as a one. You can just put one here, doesn't really matter. But do it this way. So if we could put one here, make this two. So you can sometimes you have to we gotta have to make a bit of a room. Doesn't matter from here. The point is that any correction against the trend, okay? This is a trend wave, right? How do you say this is a trend wave? Because it has taken out this high right there, right? And price was making higher highs and higher lows all the way back to the up to the top. So when you complete a five, now if you have a triangle happens where? Always in a fourth wave. So if you go after a post triangle thrust, you get what? Five waves to the upside. That's a large fourth wave here, but it's okay. was right at the 100% relationship of this, and then you have the 50% retracement right from their low. So the Meta found support here, and then from here, you got the, got the one final push to complete a 5 waves to the upside. Now, 3 versus 1 is right there, which is 100% relationship, right? Wave 3 cannot be the shortest wave. It has to get to at least, I mean, the ideal textbook print of a third wave target is 161.8. But this wave 3 right there has to get to at least 100% relationship of wave 1. You just have to remember that. If you make your wave shorter, like if the price stops right here, didn't get to a 100%, and if the price started to consolidate, right? And then you just have to watch this. Because there's going to be an invalidation, right? Now, Elliott has a rule like, okay, if you have a wave 1, here's your wave 2, here's your wave 3, and then the wave 4 cannot retrace below the high of wave 1. That's the hard rule, okay? And the price has to stay above the invalidation. And then from here, the price rally back up. And you take out this high. Now, what my point is, this wave third cannot be the shortest wave. So if we take a distance travel from wave 1 projected from 2, 100% relationship was at 598, meaning that the same exact price here retraced from this wave 2 projected to 100% relationship was 598.31. You have to get here. If this wave 3 stops here somewhere, and if it's shorter than 100, first of all, that wave count is wrong, because wave 3 cannot be the shortest wave.
Mo, I have a question.
Yeah.
So can wave 3 be shorter than wave 1 but longer than wave 5? Is that valid? Or does wave 3 have to be longer than wave 1?
It has to pass at least 100%, like this one.
Okay, so it has to be longer than wave 1, right?
Correct. 100, yes. If you're going to make a third wave smaller, shorter, it's going to be a very difficult to project the upside. The wave count is not going to look right, first of all. It's not going to have the right look. And your upside is going to be very, very challenging to project the upside. It's just not going to work. I've tried it many, many times, because I just like, okay, what if I will try to go against this rule? I've done it. You don't know what I do. I mean, just to kind of check. I was not trading it. I was just pick certain stocks. I said like, okay, I'm gonna count this thing. I'm gonna make the third wave shorter, and we'll see how the fourth wave is gonna develop. And then from there, I will see what I can get the upside. Just doesn't work.
Could possibly like when you try it in real time, it doesn't work, and then afterwards, could you possibly like done it after the fact, like
You
when
can get see the thing is this, right? If you take a swing count, I'm gonna give you forget about the labeling right there. If you take a swing count, that's your lower. That's where the swing starts on a price. Okay. Here you're gonna make a high right there. So what are you looking for when you starting to see the price starting to decline? When the price started to decline, what? So now what you're looking for?
a higher low, right?
Higher low. So what is your focus now right now is like, okay, so this move that we just had to the upside from this low to this high, now you're looking for this higher low. And you don't want this higher low to go below your low, right? So what are you looking for here? 38.2, 50% retracement, 6.66, 61.8 and 78.6. So that's your zone for a typical retrace. I mean, you don't want to get down to 78.6. 78.6 is a pretty steep decline. So you just basically given back pretty much everything. So your ideal spot is always 50. So price made a push, and now it's trying to retrace back down toward 50. This is where a lot of traders starting to get interested. So like, okay, now we can see like here comes a pullback. This is your high. What are you trying to do now? You want to go up like this to make a higher high, right? That's your high. This is your low, higher low, higher high. This is a basic 101 price trend for any price that you trade on a daily basis. So when you reverse this thing back to the downside, that's your top, there's your decline, right? And now you're looking for what? Lower high. So same retracement comes back here, 38.2, 50%, 61.8, 78.6. That's your zone. So what you're looking for now? Lower low. Now you want to take out this low. This is your basic 101 price action. You have to mark the low. Here's your high. Then you look for the retracement and a pullback if you see a price start pulling back, where you can find the entry. And then from there, you say like, okay, now you can see if we can make the higher high. So the same concept, okay, applies here. Low, high, higher low. Breaks right there, right? Higher high. Pulls back here. Higher low. Higher high. Now you take out this high. So you have two highs. This one, this one. The same concept. But Elliott makes it more advanced with these labels, with these ratios and things like. That's where your fibs comes into a play. Now, if you just want to keep it just plain simple, okay, say like, okay, well, that's the low. Here's this, and then what you do, oh, my ratios are all off here. So you do 38.2, you can do 50, 61 point. There you go. So here's your low. Here's your high. Here comes the price right to that 50% mark. And now you're looking to make a higher high, try to see if you can take out this 544. That's it. It's not a rocket science, right? If you just want to do this, you can do it all day long. I mean, this is every trading platform have these Fibonacci retracement. Now, if you want to project the upside, then you just have to look for those different tools, those projections. Fibonacci have these retracements, and then they have those projections. So projections are the extensions. I'm sorry. You just have to take this high to this low, and then you project it from here. You see, then you have a 78.6, 100, and then you can just project the upside. So the extensions will give you the upside projections. If you take out this high, what kind of an upside that you expect to because if you have to look at this way that when the price was here, it retraced back down right toward the 50%. From here, the chart was all blank. You cannot see anything, right? It's the same thing here. There's nothing to see here. We don't know what's going to happen here. This thing can just reverse right back up. It could just. But the point is, like, you can just look for higher high and higher low, and you can just look at those swings. So the swings right there, what you which you see here, are the same thing. Okay. So the swing counts will get much easier for you, but you have to learn Elliott really good. You know, I mean, I've been an Elliott guy for a very long time. When I got myself into the swing trading, I was like, this is like a piece of cake for me. I said, and then I'm just like, start trading these swings, and I was like, I don't even, why would I even sit and waste my time doing Elliott? I can just because I can just look at a blank chart, right? I can just count waves in my head. It just it saves me a lot of time. So, well, I know Elliott for so long, and when I start looking into those GAN, because then I get myself into a GAN side. I didn't get into astrology. I mean, I was thinking about it. I was like, just don't want to overkill myself. Um, and then I just start like, I mean, the point is I just showed you before. The concept is the same. Okay, I mean, the typical basic 101 is low. You're just looking for this. Now, the swing counts are different than Elliott. Okay. Now, Elliott says like this, you have one, two, three. Now, Elliott comes into a play. He puts a hard stop in validation, a rule here at wave four. A swing doesn't have that. Okay. A swing, if you have a low here, this is your full swing. That's your second swing, a third swing. Gan swing can come back like this to four. Is okay. He doesn't have that invalidation. His swing can go up to a fifth, okay, six, seven, eight, nine, 10. There's no limit for the number of swings when it comes to GAN swing trading. Elliott has degrees that when you complete one smaller degree, it makes one higher degree. Okay. And then once you complete a one higher degree, and then you look for a counter trend move, and then after that you look for another five back to the upside. So Elliott is very fractal. Okay, very fractal. All it is just repeating patterns over and over again. You have five up in one, three down in two, five up in three down in four, another five up in five. You see, it just keeps repeating. This is why Elliott is so good, because market is fractal. Market has a repeating pattern, right? So Elliott fits really well based on that, on overall with the market structure. So because I can show you some of the swings, there are. Let me show you Costco. So if I do a Costco, look, it's a sitting at 13 swing right now. See, there's no limit for this, for the swing counts when it comes to GAN. There's no 13 swings going on Elliott. Elliott will stop you from, if you're going to count, this is your triangle right there. Okay. A, B, C, like, but, but GAN only has, the swings just only have these numbers. I had those. I don't know if some of you um, saved that text. I believe it just went away because the Slack just takes things the text down after 90 days or so. Yeah, I don't want to. I'm gonna repost it. Um, so you see, like you have triangle here, then you have but you cannot count these. Like basically, what it is like here's your low, this is your high, higher low, and then you see the high was taken out right there at three. Is another higher low. So his swing trading is only going off with the highs and lows of each swing. His swing turns back down when you're going to take out the previous swing low. You see, in this case right there, what do you see here is all you see is higher highs and higher lows. None of because if this 13th swing right now, so we're we have 954. So this swing will cut, like once it will end, it needs to take out one of the previous swing low. If you see right there, see 8, 10, 12, 6, 4, 2. I have that. There's an. Where did I save this? Hang on. Here. That's just swing trading. What is swing trading is? You have odd numbers and you have an even numbers, right? Odd number swings are in the direction of the main trend. That's what you want. Either going to the upside or coming to the downside. Successive odd number swing must extend past the previous odd number swing, right? Swing 3 must end higher than swing 1 as your first swing, second, third. It was higher, right? Because it took out this high right there. Didn't well, nobody knows where the price is gonna go up. I mean, it could poke above 2-3 points, but as long as it can take out this 571, it goes in number 3. If an odd swing fails to extend past the last odd swing, it is called a fail swing. How do you know? This is your low, lower high. See, this third right there, supposed to go all the way back down here. It didn't. Stopped. So what does that mean? It gives you the F status. F status means what? It's a fail swing. That's what F stand for. Remember, we just talked about third swing must end higher than swing 1. Here it did. In this case, it didn't. It stopped. Well, you don't know where the price stopped here because you look at a daily chart. It's gonna give you several days or so Price can just come back here, it can just come back down like this again. We don't know that. You you have to trade, only based on probabilities. There's no such thing, a guarantee, or like you says like, okay, well, this the high, that's the low right there, and here's my fibs. My fibs are kind of off. Um, so here am I right there to the 61.8 retracement. Here's my 78.6, right? So the low was this, price rallied all the way to 564, retraced it all the way back down here, right? Toward this 61.8 and 78.6 area. This is the most important fib, right? As right there, 78.6. It's always, this is your last resort of any up move, upswing, or a downswing. Once you break this, okay, you have a very, very good chance you're going to take out this low. Okay, so this is the price usually fights right to this zone, especially at the 78.6. This is the most important fib, either to the upside for a breakout or to the downside. You gotta watch 78.6. There, the 78.6 is gonna have a very good probability that is going to either take out the highs from here and then you project the upside. So back to this, if an odd swing fails to extend past the last odd swing, it's called a fail swing and it gets an F. If an even swing extends past the last even swing, then it starts a new number sequence in the opposite direction. I had this thing, you can take a snapshot. But the point is like this right there will will be much easier for you if you understand Elliott Good. This is piece of cake for me, to be honest. This is so easy. I mean, this is why it's like, why would I sit and label all this thing? This is perfect. It saves me so much time. And most of the trades that I take is based on swings anyways. A lot of I'm talking about swing trading. But if I wanted to go long for, for a year, for a couple months, then I will go and work on the 195 minutes or a daily time frame wave count, because the wave count is going to take time. I know that it's not something that instantly is going to move right away. I mean, then position can go up and then you're just going to give back after a couple days, which is okay. I mean, you just have to be patient and you just have to let the position work. If the wave count is right, let the position work. That's all it is. I understand that if one's, like the most frustrating part is like you have a position that moves so well for you, and then all of a sudden you're just given a chunk back. Yeah, it's not a good feeling. I mean, I totally get that. I mean, I was what we had a Shopify. I mean, Shopify was such a nice run right from the entry that we took. I mean, trade was up like almost over $1,000. Now it's like almost like over $300 for that, for the sell off. Yeah, giving back 700-800 bucks in a one single session, its profit is it's just not a good feeling. But hey, this is trading. I mean, just gotta just gotta swallow it. I mean, giving back, nobody's happy giving back. I mean, then you always gonna have that thought in your mind is like, why didn't I just close the damn thing up there and just could have just taken out 800-900 bucks worth of profit? I mean, I think the same way as well. I said I should have just cut the trade up there, just take the 1,000 and run. But 15 years ago or so, when I bought Apple for 50 grand, I don't know if that Apple is gonna worth over $500,000 right now for me. Think that way as well. I mean, if you just want to set your mind thinking like, well, here's a position and it just went up and now it's going against me. And if my technicals are good, I mean, if the price is not making lows, you know, I mean, if your if your wave count is right and if the price swing is right, you should. I mean, I like to stay in a trade. I mean, I understand like if I enter here and if the price trying to make a push here and then a couple weeks later I'm just giving back everything. Basically, you see right there what happens. You just go up, come all the way back down. So you just basically goes right back to the flat line. Yeah, so given this much, making this much and giving everything back here, yeah, it's not a good feeling. I understand that. But at least it didn't take out this low, right? You just sit and watch and look at the spike. So days of decline just washes away in in a day or two sessions. Look at the move right there. Look at this bar. Look at the size of this bar. So how many days that it took for this decline and it just got completely washed out in one single session. One day, I'm sorry, there's a daily bar. One day. You see, I mean, you can't sit and you don't trade based on your opinions. That's just the worst way to trade. You trade what you see, okay, not what you think. You can sit and think whatever you want, doesn't mean anything. So if an even swing extends part the last even swing, then it starts of a new number sequence in the opposite direction. Okay? Because when you're looking for higher highs and higher lows, that's the basic 101 we're just talking about. That's the bull trend on any price structure, right? So when the price start making lower lows, lower highs and lower lows, yes, that's the definition of a trend change. We don't have that here. Do you see the price is making lower highs and lower lows? No. So the stock is bullish. Well, well, how long is it going to stay bullish? Well, we don't know that. But eventually it will turn down. I mean, the swing will change back to the downside. There's no such thing as going to last up forever, right? We all know that. But there's one thing that I know about swings is the higher and higher the swing will get, okay, it has a very high chance the thing is going to reverse back to the downside, meaning that it's going to take out one of the low. So that's the ATR moves. Those are the average true range. So a fail swing, essentially a lower top. That's what it is. Has a very high probability indicating a start of a down move. So it's rare to get set of swings that go beyond swing five. You see right there, up here to the five. You just take one, two, three, four, five. As the count gets higher, the probability of change in trend is getting higher. So so if I count, well, this doesn't. How can you count one, two, three, four, five? You cannot based on Elliott now, right? You see, is um, Elliott has his own rules and their guidelines. Gann has just looking at swings that just keep going up and up and up based on higher highs and higher lows. That's all it is. So there's no, as you can see, the numbering goes up and up and up because the prices keep rallying. Now you gotta have to fit this thing with the wave count. That is gonna look totally different. Shall I show you here? So then if I'm gonna go back to the wave count from there, we're looking at the same thing. Same triangle here, which is this. So from here, now you start counting to the upside. which is right there. That's your low. So how does it work now? Now remember, we're at like 13 or so. This is not gonna work. So we're at 13. Well, I haven't even looked at this in a long time. So now you're gonna have to apply those Elliott rules to it. Okay, well now you need wait. Now you need one. One, how are you gonna make it? Well, you need to have five waves. There's your two. That's your three right there to 200% mark. So what is your typical upside targets for wave three? 161.8. Elliott has talked about, has been written on the book, I don't know how many times. That's your golden ratio. That's your 200%. And then 261.8. These are the three typical um, um, upside for three versus one. If you break 161.8, if the price trend is strong, you're gonna go to this 200. Once you get to that 200 mark, any indicator you're gonna look at it, MACD, your RSI, your oscillator, or whatever that you follow, is gonna be overbought. Okay. Many of you know that I'm not an indicator guy. I do look at RSI. Okay, not even 14. I don't even like 14. Okay, I look at everything on 5. 5 period RSI has a much better probability for the price to either bottoms out or just tops out based on if you work with the wave count and stuff. 5 works much better, 5 period over 14 period. I understand there's a lot of people wants to watch. They're always tracking RSI 14, RSI 4. Just I don't. It never worked for me. I'm not gonna waste my time. I don't even put any indicators. You can see none of my charts have as I ever posted. Even I show it to you guys, or even I post on my Twitter, is gonna have some indicators because I don't need it. They just don't work for me, and I'm not gonna waste my time, learning those indicators, divergences, and all that stuff. My fibs will do everything for me. I know exactly what to look for if I'm in a trade. If I put 200 here, let me show you this. You show me any indicator, I'll prove you wrong. Let's change it to 14. Here's your 200. Here's your 14. See? Overbought, right? What's the reading on this? 91. 91 read. So why would I put indicator here? For what reason? Because I know what it's going to be. Same thing to the downside. If I have a price that comes down to a 200% on my wave count, I know it's going to be, every indicator is going to be overbought. What else do you watch? The MACD. I don't even know how to use that one. What is it? This one? Okay. Whatever. Okay, let's do it. I don't know. I don't know. I have everything. I just don't follow it. So, so what happens here? Here's your divergence. So the point is like, yeah, I mean, this one's showing all the way back down here, but the price almost totally went pretty much sideways. Indicators do help. I do get it. I mean, I know a lot of people, it just depends on now what kind of a settings that you want to put it here now. That's another challenge part, like what settings will work for you because whoever designed all of these indicators, they just put those bunch of settings in there. Now they say like, yeah, go play around and see what works for you. I mean, if indicators are the game changer, I mean, don't you think that trading would be the most easier job on the planet Earth right now? These indicators are such a magical tools. I just don't follow it. It just there's no point for it. I trade price and I trade fibs. I take my fibs. I mastered these fibs. Let's put it this way.
Mo, I have another question. So going back to the swing, I know you talk about the rules, but can you kind of just briefly talk about like how do you use the rules to like to formulate a trade? Also along with Elliott waves, like how do you fit those two together? Can you just talk about like the entry and like exit and things like that?
I mean, a swing count. Look, you have to look at this way. People who are only trading based on Elliott, they just only have one. They just all they know is one thing. Like, okay, well, I'm going to be taking trades and this based on Elliott, right? What I've learned over my career, and I've been doing this thing for almost 18 years now, that is the overall dynamic, like the overall how the market has been changed over the years. And I remember and I know how market used to trade 10 years ago compared to how market trades now. It's day and night. Okay? It's day and night. How the market was 15 years ago compared to now is just, and I just cannot believe that there's people who sit and comparing 1929 to to today's market, a black and white picture. The computers were not even around. You're drawing your charts with your hands, pretty much that time, and you have the those coupons, those that you can go get it from your post office if you want to buy a number of shares or something, or from Department of Treasury. That's how you were buying those shares and stuff, with those coupons, physical like certificates of stocks. And you just compare and take that approach to the one of the fastest electronic trading that we trade on a day-to-day basis. I mean, how can you fit those two things together? You know, and you want to talk about to 1929, then our grandparents were around alive that time. No one was even born. I mean, something. I mean, look. I mean, if you want to talk about something, I mean, talk about something that makes sense, right? You don't need 70-year-old data to project what you can make out of the market for the next 2, 3 years. Give me 2, 3 years. This 3 years, I would say, is plenty of time. Even 5 years. You can find so many repeating patterns in a market that you don't need to go 60, 70 years back just to make a case of a top and there goes. It's just so way different. This is what's going on Twitter. That's what people are buying and they're paying for this nonsense. And one guy sitting and calling market tops from the last 2 years. And then the market drops one single session and there. Well, see, I told you market is going to drop. Well, you've been talking about this one the last 2 years. I mean, well, a swing counts here. I mean, there are different, there are four type of swings. Okay. I do both of them, all four of them. There is a volatility swings that goes with an ATR. Okay. That looks like this. If you don't want to do these ones, then there is a 3 bar swing, which is this. A 3 bar swing is the way to go. You can change that thing to a 2 bars. I don't there's some guys are doing 2 bar swings, I mean, I personally like 3 bar swing, okay, instead of two. Three has a much better rate of success over two. Two just changes fast, okay? What I mean by that is just like, I mean, I don't want to move you guys around too much from swings to Elliott and this. You guys need to focus on one thing, okay? You have to, you can't just jump like, I know if you want to learn something new, but you have to look at this way that in order, you can't just jump on this and then they're like, well, I want to keep Elliott on one side, like I want to do Elliott next. I did Elliott first, but that is more advanced and way more kind of subjective and a little more complicated. This thing become much easier for me. Which is this is nothing. I mean, I much rather do this over Elliott, to be honest. I mean, I'm not gonna give up on Elliott, but I don't spend much time doing it. It just you know, as I said before, the 6.5 hours when market opens, I want to find trades for everyone. I can't sit and do my charting and stuff. That just it gets on my nerves. I want to find trades for everyone that we, you know, stay focused. Stocks that I'm watching, I have my signals and whatever that I do, retracements levels, things like this, depend which swing we're on. I want to find trades. I want to make wave counts and this and that. It just takes my time and takes away your attentions and things like. We want to make money. I mean, you're here to make money and you're here to learn. So now if we have time after the close, before the market opens, that's different. Okay, well, we can look at the chart and you know you should have a game plan ready before you go up, go in a battlefield. You can't like in a trading session and then you sitting and updating your charts because you got a bit of a dip. That's just not the way you need to trade. If you're going to change your wave count every single day, then why you are even in the trade? Just give me that answer. Why you are in the trade if you're changing your wave counts every day after every close? So a 1 hour window, okay? So each session is 6.5 hours long. So 6.5 hour longs if you're on a 1 hour chart. So how many candles do you think you're gonna see it? Six, right? And then the seventh one was gonna be halfway, and then the session closed. That's your 1 hour time window. My favorite time is 195. This 195-minute chart is my favorite time frame. It the reason, okay, well, some of you probably thinking like, what the heck is 195 minutes? 195 minutes, okay, you take 6.5 hours. 6.5 hours is 390 minutes. You take 390 divided by 2, it's going to give you 195. Okay? 195 minutes. 195 minutes is a half day chart. Meaning what? You're going to get 2 candles every day. You cannot have more than 2. So yesterday, this is Costco looking at. These are the 2 bars. Session ended here. That's it. There's 2. Cannot be 3, cannot be 4, cannot be 1. It's going to be 2. Every day. I don't like 4 hour charts. I don't like, I don't know, whatever you want, 30 minutes or 15 minutes. Those are fine. Those are different time frame, different strategies, whatever you're doing. If you wanted to do Elliott wave, you're 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 gonna have a much better success if you do 195-minute chart to a daily time frame. You don't even have to do daily, to be honest. Just stay on a one time frame, 195 minutes. I know what works. Okay, it's a half day chart. A half day chart is it removes a lot of emotions, okay, from by looking at the trade that you're in. Because if you look at a 195-minute chart, which is going to be two bars, two candles, I'm so used to because I always have bars. I don't even know these candles to be honest, but two bars per day, each day. And then, but then if you're going to start going here to a 50, look at that. I mean, then you're like, wow, big, huge move. You know, like, yeah, this smaller time frame, you're going to get one more data. But if you in for some time, depends what you're trying to do, it's just going to give you a much better read. It's going to give you a much better view of looking at the price. Okay, so where's the resistance here? Right there, this low. Where we have our support now, this low. So if you're bullish, what are you trying to do? You want to you want to focus on this print, this low. If you say like, okay, Monday I want to jump into this trade. I like Costco. We had the weakness. They have 4.3% decline here, 3.2 here, 5.4 here. So it's kind of, kind of close to it. Pretty much same measured moves. So if you think that this is a possible low on this huge candle, you can see the size of this candle right there from the low is pretty strong. So if you think like, well, I wanted to take a shot to the upside, what would be my potential upside that I should be looking for? 965. So for you to sit and think like, oh, I want to go here or I want to go here, you will get there. But you don't just project some wild price action to the upside with a big hope in your head is like, oh yeah, I got in at 954. I'm gonna go to 1,000. You'll get to 1,000. You'll get to 1,000 once you're gonna clear this first, you know? And then where do you go from here? To this swing high. And then from there, then you will talk about your 1,000. There's a lot. Oh, this is a lot of liquidity sitting there. So that's your upside right there. If you just want to do just basic, take the low with the higher, lower high, it's lower low, right? Because you see that price is making lower highs and lower lows. So it depends on a time frame. Which time frame do you trade on? So when you look at this, it says like, okay, well, if I get myself a month, 3 weeks in a trade, can I get here? Or might just get there on Tuesday or probably get on Monday, which is fine. Still gonna make money. But what if we take out this low? Well, then this stays where it is. Now you gotta have to look for the weakness. So where does that price can stop? It can stop all the way down here. You see, I mean, you can do this is like basic stuff. I mean, if you, from here you can put your weave ups and stuff. You can do those. You can do your weave up, take it from here, take it from this swing, put your weave up right there. There it goes. 963. See, it's pretty close to 965. I know all this. I don't I don't I know where the high is, like if the low is. You just have to pay attention to this thing. These weave ops and all the liquidity zones and think that they're all gonna line up all together. Trust me, they will. But it doesn't, you don't need five different things on your chart. You just need a simple chart. Keep it simple. It's gonna work much better. You just need this and you just need your tools, the Fibonacci, retracements and stuff, where you can find support. So that's your window. But now you have to define your risk, taking a shot to the upside. Okay, what is my downside? How is my downside looks compared to my upside? Then you gotta have to think about like, okay, what I am looking at, my risk to reward ratio now. How does it look? Okay, so you're looking from 900, you're looking at 1,000. Okay, that's the worst case, right? That's what, 100 points, roughly, give or take. You're sitting at 950. You're almost looking at what, 50% retracement. So if you says like, okay, I want to take a shot at Costco. Okay, I want to ride this thing all the way back up to 1,000. That is my goal is. But you look at your downside is 50 as well. That's a 50-50 shot. You think the risk, if you talk about your risk versus reward, okay, does this looks good for you? Like if you take an entry here, oh, so you stop here, that's your risk to reward right there. 50 points to the downside, 50 to the upside. I wouldn't take it. I mean, if I do this to 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 go like this, yes. As a trader, I want to risk 1x to make 2x, not one for one. This this is a 50-50 shot. You're either gonna be wrong or you're either you're gonna hit it. Your risk reward has to be two. One against two. Or you risk 1x to make 2x. I try to structure a trade with 1 to 3. If I do this, and if I'm right, at least I can make 2x's. Worst case, I can at least make one from three, at least one. Don't you think it is a much better odd? Well, I don't want to make a trade with four or five. I mean, just gotta take it easy. I mean, if you see what's going on here, you just gotta have to define your risk. So there's a lot of things that comes into play. You can't just blindly pick a stock, throw some couple wave counts and stuff, thinking like, yeah, that's it, I'm in. I mean, you putting in real money on the line. You have to think, see what works. I mean, can throw some moving averages and stuff if you like. There's your 20 right there. You want to throw 50? I mean, that's fine. 20, 50 works good on a half day chart. I mean, that's right there at 960. You see like how the low is and your VWAP and your 20 EMA, like all, this is what it needs to break to make a move back to the upside. That's I mean, I can show this thing to you on any chart that you like. But I don't need to use none of these stuffs, these moving averages and all that. I know where my high and lows are. And then from here I just I just do my fibs. I just want to take this low. Oh man, doing opposite. Take this low, this high right there, right there. So you take 965 down to 943. And now you look for those. There's your 78.6, 957. So you know this, that this thing triggers based on, but you don't want to put yourself in, but you have to keep that thing in mind that this is a 195-minute chart. So 195-minute chart it's a long time. You're just dealing with 2 bars each day. So if you like if the price, let's say, come back down to 951, 951 is 61.8. 61.8 is a pretty good retrace, like the fib, right? 61 point is a golden ratio, right? We always talk about it. So if you can just go here, get the pop right back here for the day or two, or you just work opposite, look back up. You can do that way as well. Pick an entry at 951 to target 957. That's your 7-8 point range. 7-8 point range, that pays. I mean, it all depends. Like, what are you looking for? Like, how are you going to structure your trade? If this breaks right there, then you're gonna say like, okay, there you go, and now it has a pretty good chance it's gonna go hit the 7-8.6 in the next day or two, because you're only gonna have 2 bars, and then session is gonna be over. You don't need to sit and pay attention, like looking at like 15 minutes or a 10-minute chart. Those are like, you're gonna start looking at like, whoa, it looks like just hit by a bus or something. Just deal with 2 bars. Now, if you want to go up to a daily time frame, it's going to be only one single bar each day. So you just gotta have to get yourself a much more time on trades and stuff, because you're just gonna go much bigger on, it's gonna go much bigger on a time frame now. So you have to buy a lot of time as well for the trade for the trade to play out. So the times are very, very important. You always have to make sure that you can't just like 1 hour chart is it's a very good chart for a swing traders, for swing trading. Okay, and if you are scalping and I wanna do an ODT options like scalp here there, then you gotta work on a 5 minute chart. 5 minute chart on a linear scale, not a log scale. The log scales are if you're looking at a price on a bigger time frame. Linear works really good for day traders. I mean, like if you are looking to scalp, 2, 3 points here, there, 5 minute chart with 9 and 20 EMA. 920 is good, but it's just keeping a linear. That's what day trader use. 1 minute, 5 minute charts, linear on a linear scale, and that's how they're trying to. It's just gambling. I mean, once in a while you will ever see me swinging um, trades if I'm like really in the mood. But I'm not a day trader. I don't here there I'll swing it, but normally I I stay with the trades and see how the wave count unfolds and go from there. I mean, you guys all have seen the logbook. How many trades I've taken this year and all the previous years. I mean, yeah, a few losses here there, but I have a I have a lot of winners. That's for sure. Um, Mag 7, we already did all this. Qs. I was looking at this yesterday. I know a lot of this is what I think. I was gonna show you this so you can see how this thing has developed. As a matter of fact, so this was a chart on a 12/6. Okay. So it's the same thing here. Oh boy. I just want to show you side by side. I want to show you this. Where my window went? Oh boy. Oh, come on. Where did it go? Okay. You see the same 1, 2 as your 503 support right there. Right there. And here's your one down and two, which is the same 1, 2 here. What I was looking for is for this third to kind of make a bit more room to the upside. And if I put this third here, then I have an overlap here with one, right? As you can know, this green four cannot retrace below the wave one. But this case right there, we see then we had a print here, this 538.25, which is right there. It's a little ratio off. The high was 539.15. So we're at that 100 mark, which is good. So, but my point here is this. This is the August low, right there, the low. So this is the August low right there. And what we're trying to do is, because if this is the largest percentage decline, right? This was almost 15 point, almost 16% retracement right there. So from there, we rally back up, okay, until here, take out this high, right, which is at 503. From here, we made them push, failed. Then finally, we grind, and now we're finally made a move back up. So the area that you have to pay attention is this, right? Why is that? Is this because this is where we have a 16% decline from peak to trough? It's the largest percentage decline because none of these ones here, okay, looks the same like this, right? So in order for us, we just talked about this thing earlier is like what we're looking for, what higher highs, higher lows, higher highs and higher lows, right? Is that's how we're going to keep labeling our wave counts as well. The trend to continue to the upside. This is a major support because it took a very long time for this kind of V, sorry, the round bottom, you can call it like this, to make this move from this breakout. And now we're like pressing right back toward this 500 mark. That was a bit of a bounce. So the point now is now we're going to label all this thing, which I have it here. So we can clearly count 5 waves up, down in 2. So what is our textbook Elliott rule is 3 versus 1. So 3 versus 1 is at 559. Okay. So if this is a swing up, this is a swing down in 2. So what do we need now? We need to fit 5 smaller waves within this 3 of the higher degree, right? Because your wave 3 cannot be a 3-way move. So we leave everything the way it is. And now we need to fit 5 blue ones within this 3 of brown one is to see if we can get to this mark. This remains as is. Well, I don't know we're going to go there. We might just stop right there. We just stop right there, or we just rip right. We just might just go straight to 200. We don't know that. But you have to be a little bit reasonable with your technicals, is to see like, okay, what would I could expect as an upside. Hang on. So, and then you have 1, then you have down, up and down in 2. So this wave 1 right there, as you can see, is pretty huge, right? Down in 2. And then from here, our wave 3, as we talked about it, cannot be the shortest wave, right? It hit that mark. That's where we backed off. So if I do this here, okay, now we're going to put our stop loss right there, this wave 1, to this 498 area. We need to fit 5 waves within this 3. Okay. Then we'll set back in 4. That we'll try to play with this one. Okay. And then we'll get one final push here is to complete a 5-way move from August lows. Because right now, if the way I see it is we have two weeks left. Okay. We're gonna have a bunch of holidays are coming as well. Either this 4th goes sideways. Now this 4 is this 3 is valid. So all the rules and you can it's all good. Okay. But if you see the amount of time that this second took, that compared to this one is way more directional, right? There's a big difference. You see how much, I mean, you can't put it here to make it 2 here because you had a new low here. So that doesn't work. So you gotta have to uh, um, I mean, the retracement is almost is here to this 23 point. The 23.6 was met here as well, right? So we end up making a higher high, as you can see, above this 498. We did manage to go up, and then it was a false break. That's how what you call expanded flat, and it just do the rug pull on you. Corrections are very subjective, you know. So it's always like if because like if you have this like five waves here and then the price started to decline here, you here comes your 23.6. Okay, that is my first retracement. Second I can expect is 38.2. But in this case, the move was so huge, like too strong, it only managed to retrace to 23.6. And then what it did, it tried to give you a big hope, like, okay, yeah, this thing will continue, right? So if you just make like this, so here's your five-way move, is you can just put like this, A, B, and C, and then you come down to this 23.6, like, okay, here's my first retracement of against this five-way move. So what I'm looking for is to get the breakout, right? So you expecting this. Remember, five up, three down, five up, three down, five. This is just a sequence. It just that's what makes Elliott so damn good. It's a repeating patterns. Okay, there is no strategy or any other GAN or like anything that you can name it will define such a trend the way Elliott does. Elliott is a very well defined theory. If you spend time and pay attention to it, it's you can you can make a lot of freaking money. you know, it because it works really. It gives you a much better odds that if what has happened, if I have five waves up, if I have a three waves down, I can expect another five waves up. Okay, that's what makes Elliott so good. It's just repeating two patterns right there against the counter trend move. But that counter trend move right there is gonna torture you. This is where Elliott gets subjective. If you don't want to get into this ABC, WXYs, and all the zigzag flat, expanded flat, running flats, and all that kind of stuff, you don't have to do this. Okay? All you do is just like, okay, if as long as I have a clear five waves up, okay, you just draw your fibs from this low to this high, and you just, as I said before, look for those 38.2, 50%, 61.8. That's all. Don't get yourself caught into those ABC moves and WXY moves. Those are the most subjective. Corrections are always subjective. Okay, they could change. I just give you the example. Here's your simple ABC move. Came right to this 23.6. Look what happened. False break, boom, went right back down. Then from there it took off. You see? It happens. Why is that? It's because it's trying to take out this high right there. It's getting closer and closer, but it's just keep rejecting. When you look at a blank chart, okay, you need two things. I would say just one thing. Ruler. It's my favorite tool. I love ruler and more than any other lines or labels. Trust me. You can just measure. Just become a carpenter. Measure. Sit and measure. Like this. Okay. Now you know I have a 15.990% decline that happened months ago. Okay. I know what the high and low is. You mark those ones. So any bigger correction that you're gonna have is gonna be a three-way move. Either it's gonna be a WXY, it's gonna be ABC. Doesn't matter how you what you put there. It is irrelevant. Your focus right now it should be where is my largest percentage decline? One previous one. You can now you gotta scroll the chart back and go up to daily time frame and stuff. Then you can find all your bigger retracements on the biggest declines back there. That's different. This is this is a 1 hour chart. Oh, sorry, this is two, whatever, one or two. This is more than enough. 16% decline. You know how much money that you can make off a 16% decline in the Qs? But nobody's gonna cash the whole thing. But just just talk about you know 10%, 5% move for an ETF, a Qs to catch a 5% move. That's huge. I mean, the index moves an average of 20% a year on average, give or take. Just just for something for you to think. I mean, these things are not going 60, 70% a year, as you know. S&P is average yearly return is 10%. I mean, we're up at what, 24, 25% year to date. I mean, we're just looking at 2 years worth of returns in one single year. I mean, so so from here, I like this one. What I would make a case now for the next 2 weeks is is to see if are we just gonna kind of go sideways because the Q's swing is up. Okay, right there. So the swing is up. We have a VWAP sitting at 525. Okay, the low is 509, which was yesterday. So we take those. So we take 510 and 525. That is what a 15-point window. So now you got a 15-point window between this decline that we just had. The wave count looks good. I want to see if we can get to 161.8. That will deal with the fourth. Then we'll deal with the fifth one. I'm not worried about that for now. But my focus right now is to see if we can try to fit five waves within this three. Now, this wave four has a relationship with wave two because these are the two counter trend that moves against the trend. There's the trend wave. There's the counter trend. That's the trend wave. Counter trend move. Then we're looking for a trend wave. So this one, look at this. 1, 2, 3. This is, I really like Qs. They're just working really, really good with fibs. They've been, as you can see, this low. Look at this 38.2, 2.6, 1.8, 50 here. I mean, we dip like 1 point. Look at that 23.6. These are textbook prints. Where are you gonna find this? Look at this 100%. It's what we look for, green and blue ones. These are our targets, green, blue. I've colored them for a reason. I didn't color this one, left a blank. Should have colored this red. So these are the retracement right there against the two. So now this is the 1 hour chart as you can you can see it. But the thing is this wave two right there, I chewed a lot of time because it has a false break. Our major support is sitting right there at 503, right? It took a very long time to clear this. Went up, failed, grind higher, retest. You see how much fight the price was fighting here? Up, down, up, down. You see? Because it's trying to take out this decline, this high right there. So all of it is gonna be like every time where you're going to see the largest percentage decline, and as soon as the price is gonna come and right to that level, it's gonna hit that wall. Now you have to pay attention just to see how you are going to manage to play that breakout. Because sometimes the breakout can just be a double top and then the price rejects. The same exact thing would just happen on IWM. A small cap. A small cap did the same thing, went all the way back up to 240 mark after 3 years. That's a 3 year high. Okay. And the price and the price reject. And now we have 11% decline from a double top. 3 years it took for IWM to went all the way back up. Think about it. Yeah. We'll go to weekly. Look at this. This is a buy. I mean, it's gonna take some time, but it's okay. It took 3 years. The high was 244.46, and the high this year was 244.98. I mean, we're talking pennies. And it took 3 years for price to recover back toward this high, to the all-time high. And then from here, now we had an 11% rejection with a double top. Is that thing's gonna get taken out? Yes, it will. No index or ETFs tops with the double top or triple top. Never did. If you want to show me somewhere, I would love to see it. It doesn't happen that way. It's gonna get taken out one day. Same thing we did with, I'll show you an example of gold. Gold took what? Um, Gold. This high was August 6th of 2020. Where's my, and then when did we break? Yeah, March 4th this year, right there. So from 2020 up till 2024, gold took out this high right there. As you can see, this came close, rejected, close, rejection, close, backed off, finally cleared. It did. It will. This kind of a this is gonna get taken out. But the most difficult part about this is to play the breakout with options. You know? Well, first of all, it's a very huge time. Nobody's holding options for 4 years. You gotta have to look at it this way. But if you just study a price, okay, that what you can expect, you know, if any when you have sort of like a quadruple top, but the point is like it's gonna get taken out, and I even post this thing on a Twitter as well. The price was 169. I literally picked the bottom. Look at how much it rallied. It's crazy. I have a I've been long gold 700. It's my I keep entries on the chart where I'm at. My bottom right there. Went up, gave pretty much everything back. So I've been long ever since. Never sold it. It's my it's when the gold was 700 an ounce, and that's how it rallied back up ever since. My wife is gonna kill me when I sell gold. It's crazy, the gold bug. Um, Gold is, I was just trying to trying to show you the example is like double tops, triple tops will get taken out at one point. Always do. S&Ps and Qs and IWMs and stuff, they don't form double tops as a market top. Like, I mean, yeah, any retracement that you're gonna get is can come back down for some time, but those double tops and triple tops gonna get taken out at one point. So you made a case, was asking me about gold. We did this, yeah. It's fine. It's just some sort of a fourth wave right there. Now you got this triple top resistance right there, you see? Had this decline, went up, rejected, down, made another attempt, rejection again. You see, now you have 250 is what gold has to break to make that room back to the upside. If it does not break, if it just kind of goes sideways, it can do that because this is the end of this wave two. This hybrid as a triple combo. Here's your one, here's a down two, up in three, triangulation in four. This is an extended fifth. Remember that I told you about diagonals with the extended five. You just remember that. If you happen to have a diagonal in wave one, you're gonna have an extended wave five. Just remember that. Okay, I can show you thousands and thousands of wave counts will be the same. Okay, diagonals have extended fifth. If you have a shorter wave one, you have an extended wave five. If you have extended wave one, you're gonna have a shorter wave five. Just remember this, okay? It's gonna help you a lot.
Mo, in this chart, the extended fifth is the one which happens after blue four.
No, I'm just talking about this because this is a higher degree too, right? So when we have our one, this is the wave two. What is the upside projection is for this wave 3? 161.8, 200, right? So if you just do Elliott wave this way, you don't have to worry about any of that stuff. You can just get rid of this. Now, what I mean by that is just like now if you show you the
What I was trying to understand was that could the extended fifth be the blue 5 already happen in this wave?
now how do you know? Okay, are you talking about, say one more time?
So you have a green 5 there. You see your green 5. Is
Yes.
that the extended wave you're talking about?
Yeah, the
Or
wave.
you're saying that this 5 green could extend even higher than that number?
No, it's not gonna get higher, but you have to fit. Okay, so this is a one higher degree of wave 3, right?
Oh, that's the extended fifth. Okay, got it. Okay.
This is the intermediate degree right there. So you need to fit 5 wave. Remember, wave 3, a higher degree is a motive wave, right? It cannot be a corrective wave. You need to fit 5 within the one higher degree because this is a one smaller degree. Okay, this green one, this one. So it goes like this. Let me do the line so you will know. This way you better.
No, I got it. I was just counting the green 5 incorrectly. Now I see where your green 4 is. It already looks extended.
Yeah,
It already
it
looks
is.
extended. Yeah.
So then my point is that once you have a diagonal in wave 1, you gotta have it has extended wave 5. When you have an extended wave 1, you're gonna have a shorter wave 5. What I mean by that is this. Let's do this way. That's a simple 5-way move, right? Your relationship, oops, let's do this. Show you in the blank chart. You can do it at any price, it doesn't matter. Okay, that's a 5-way move, right? They call a motive wave, trend wave, impulsive motive wave, you can whatever you want to call it. So oh, it's not letting me do this or not. What's going on? Why my motive charts got frozen? Do it here. Whatever. So hang on. Okay, now it's good. I'm gonna show you this. Okay, here's your 5-way move. Okay. Draw a line like this. So when you have a 5-way move here, like this, right? Now this 5 waves makes one higher degree of 1. So this 5 waves right there, it could be a motive wave, meaning a 5 waves like this, impulsive, or it could be a diagonal. There's no other way. There's no third, fourth, fifth, sixth ways. There's only 2 ways. Wave 1 can be formed. And then you have a wave 2 right there, which typically retrace around in this area. Okay. Now, if the wave 2 is starting to go against this much steep, like go all the way to 78.6, I mean, then you gotta be watching really, really close. Like, okay, well, here's my low, and now instead of giving back 50% of the entire move up, I end up I'm like sitting right there at 78.6. It can. Wave 2 can retrace from this mark all the way down here. It doesn't need to hit almost to the penny. It can stop here. It can stop here. It can stop here. It can stop anywhere. Stop right in the middle. It doesn't matter. Okay, but we as a trader, we're looking for entries on these retracement levels. And then from here, what we're trying to do is to see that we can take out the higher wave 1. So when you take out the higher wave 1, then we're looking for what? Then we're looking for a minimum 3 versus 1 relationship of 100% to this. Whatever the thing is, now those ratios are going to change. It stops here, 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 here. So it depends. So we need to get, so what is 100%? 100% is the exact measured move of your wave 1 projected from your wave 2 is an equal distance of 100% at this price. So now the Elliott comes in play. Now Elliott says a wave 3 cannot be the shortest wave. So there goes your rule. So if you have a wave 3 that stops here, doesn't even get to 100%. And then from here, you need to find 4 to breathe. Okay. Now, if you have a wave 2 that went up like this, and then use third stops here, you only have this much window for this wave 4 to breathe. Okay, because if this fourth right there is not, you see, it's gonna the system is gonna start screaming at you. It cannot go below 155.13. It has to stay up. So then now let's suppose from here the price did kind of stop somewhere around here like this. And then you get this final, you get one more push to the upside in this wave 5. Now you have a very large wave 5, wave 1, shorter wave 3. How are you going to measure this fifth to the upside? That's one thing. Second thing is this. Does this wave count look right to you just by looking at it? No, it is not. Your wave count must have a right look. Otherwise, you don't even have a wave count. It has to look right. You see like how well-defined Elliott is. This is what people simply don't understand. But you just have to follow it. Follow the rules. Read the book. If you cannot understand the book one time, read it one more time. Read it 3 more times. I've read the book. I don't know. I have a few of them. I don't even know where they are. I mean, just I was traveling something, going somewhere out on a vacation, whatever, sitting on a plane. I was reading a book. Same thing. I mean, I just had interest and I just love it the way everything is so well defined in this and just but people just makes it so complicated. I don't understand the logic. Like it's a simple rule. Just follow the rule. You just have to find you found 5. Now you're looking for this retracement. And now you're looking for this wave 3 to go. Okay, your first minimum target should have been a 100. Is this if you find an entry here, 38.2, and if you get to 100% here, you should trim at least half the size of your position. Okay, because this is the run that you just had to 100%. This is where I book profits. Okay, and if you had if the price is strong, meaning that it's moving up in a strong upward, like it has a lot of momentum. Okay. That's what we find on RRGs. We're looking for alpha and we're looking for momentum. That's what RRG comes handy for us to make decisions based on the price action on a chart. You just have to put things together to make a bigger picture. You can't just blindly pick one single chart, throw all your money into it and thinking like, yeah, well, I hope I'm right. This is not how it works. I cannot rely or based on a one single chart tell everyone, hey, get in, and I have to look at 3 4 different things. It just has to go along together to give me a much better odds of winning the rate, the trade. This is, I mean, I'm not gonna, I mean, this is why I'm right most of the time. I don't have to prove it to nobody what I do. You guys can scroll up on my Twitter page, or you can just look here. I mean, because I just don't rely on a one single chart. I have Gann swings and I have my Elliott wave count. I need confirmation from Gann. If I get confirmation from a Gann, I'll make the wave count. When they go side by side, I mean, you have a very good chance of hitting that trade. But to put them together, it takes time, and to to bring them together, it takes time as well. There is not a person in the world I don't know if I would love to talk to him and has ever combined Gann swings with Elliott. No one has ever done it. Because this thing can change. Okay? That's the only um, one thing that I have, that if I will just fully, I used to be fully relied on Elliott wave because I had no other way of looking at price action. But I was trading currencies and stuff. Those are different times. That wasn't this motive wave wasn't even around that time. I used to hand label everything. I'm talking, 14, 15 years ago. None of these charts, these softwares were around. I just had those I don't know if they're still around, E charts or whatever. Yeah, the way I'm just showing like this is how I used to do. I just hand label all these. It doesn't have those shortcuts and stuff to run these upside downside projections and things. This is all fancy stuff that just saves time, definitely now for sure. It wasn't like this before. I used to have the retracements and I have those expansion tools just to project the upside. That's all I used to have. That's it. And then from there, I mean, these softwares starting to come in, and I'm like, that's good. Makes my life easier now. I don't have to go hand label anything anymore.
Mo, I have a question on commodities. Don't commodities often have extended fifth waves, like gold?
I mean, you have to look at this, that the point I was making here. What the hell happened here? The point I was making here is that the price is breaking, okay, 4-year high. So you just go up. So you go from take this top, you come down 22% for a gold, right? That's a bear market. A, a, the bear market threshold is 20%. 5% is a correction, 10% is a correction. For an S&P, 15% it gets is gonna be, the alarm's gonna go off. The official bear market starts at 20% when the index drops from peak to trough. 20% is when the Wall Street is going to make the headlines tomorrow that the market is in a bear, that's the start of an official bear market. 10, 15, 10, 5, 10, 15 does not consider a bear market. Same thing with NASDAQ, same thing with any other, these three indexes. Dow Jones, NASDAQ, and S&P. So when you have over 20, I mean, yeah, gold is trying to make the attempt right back up, getting basically out of that 20% threshold. And it just now is just gold had a massive run. I even post this thing on a Twitter as I said, this thing is gonna break. It's just a matter of time when it's gonna break. So like just stay long and just keep trading what you're trading and let that thing work and just wait for the breakout. So from here I was like, okay, I can at least count 5 here as a diagonal, down into right to this 38.2. So we're just talking about this. And now we're gonna see like we just need to break this top. And look how it managed to clear this finally. And now from here the gold has this is a second wave. Sorry, the second wave. Now we're looking for the third. The third could end here. It can end here as well. I just gotta have to go like I'm gonna change it. I know if the price breaks to this 230 kind of mark, well, what I will do is I'm gonna move this 3, put it right there. Okay. Then we're gonna have this fourth wave. Okay, is going to consolidate based on this second wave. And then we'll get another fifth wave to the upside. Gold has upside. This story is not ended here. Because from here, it can be counted as a 5 wave as well. This is how you will know when your third is going to be over. You can do this. 1, 2, 3, triangle 4, and you can just count 1, 2, 3, 4, 5. You can just put this 3 here. But this 3 right there will confirm if you break this. Then we'll just move this 3 right there. Then we'll look for this wave 4 to play with this one, with time and price. Then we'll look for that 23.6, all the retracements. I'm not going to run all this. One has to confirm the other.
Mo, can you briefly explain about the one and four, 2, 4 and 2, like how do you play it? So once you finish the wave 3, how do you look for wave 4 in comparison with the wave 2?
Okay. This is a trend wave. Where's my... Okay. Come on. So where we were doing here, like this, right? So this is your wave 2, settles, which is somewhere around here, right? And then from here, we're looking for this wave 3. Our minimum target for wave 3 is always going to be a 100%. We just talked about it. The ideal target of the golden ratio that we talked about is 161.8. This is the typical, most of the time, this is where the third will come to an end. Now, the wave 3 can extend to 200 as well. If the upside momentum is really strong for a stock, the price to accelerate, it can go up to 200. At 200, once you get here, The only alarming signs that you're gonna see everywhere, that your every indicators that you're gonna see, they're gonna be overbought, way overbought. You're not talking about just like 70 read, you're talking about like in 80s and 85, like high 80 reads on all these indicators. You don't normally break 200 that easily. You can kind of poke above another few point or two. The price is gonna take a bit of a, this is, you're gonna stop. The price will take a bit of a breather. The indicators has to cool off. But that point right there, it depends what is how you going up in this, the the smaller tree that you have. Okay. Let's draw this way, it'll be better. This thing is going up. Okay. I need to restart the thing, goofing around a little bit. So now the question is that if you can able to fit these blue five within this three, then you look for this wave four. Okay. Remember, the Elliott is wave one is an actionary wave, right? Trend wave. Wave three is a trend wave. Wave five is a trend wave. The only corrective waves, the counter trend that moves against the trend, is the wave two and wave four, right? So the wave two can be an ABC. Okay, you can do this way. You can make as a ABC move. You can make this thing as expanded flat. You can make this thing as a complex. You can make this thing as a zigzag. You see? So now you sit in and always like guessing, like, oh, which one is it? You know, it's gonna be which one is gonna play. You have like three different ways: a flat, zigzag, a complex. Okay, it's the same thing. So you have one, two, and three. Only three ways, three different ways. This thing is going to fit here. Which one is going to be? We don't know that. So there's no point to make any guesses. What is going to, who cares what is going to be? You know, it's going to be a counter trend move is coming, is coming. So what you should be looking for instead of sitting and guessing, you just look for a simple retracement against your five-way move. That's all you have to do. Just look for these retracements.
So I guess the question is like once you already have the wave two.
Yeah, I'll get there. I know what you're asking me. I'm gonna get there.
Got it.
So you now you need to do is you need to take out this high, whatever the price finds support here, right? Now you get here. Now the correction, the wave four has a relationship with wave two. Okay. Then you look for is 4 versus 2. The 4 versus 2 is distance travel in wave 2 is the exact equal distance will be traveled in wave 4. That's what they call 4 versus 2, 100%. Okay, that is your price retracement that will compare side by side. Typical, most of the time, the wave 4 should have at least a 100% relationship of the wave 2. One correction meets with another one. That's one thing to look for. Second thing which you look for is they call 4 versus 3. A 4 versus 3, this is going to be the wave 4. Then you take your fibs from wherever this wave 2 was ended, not from here, from whatever the 2, you draw your fibs from here to here, is going to give you this 2, 3.6, 38.2, and 50% retracement. This is where the fourth wave has to breathe now. Okay? For this to make one final push to the upside, to make another higher high above the wave 3, is to complete a 1 degree of one high, because this is one small level makes one higher degree. So this is where you're going to put your 1 here, like this. So your 1 higher degree is completed. So from here now you expect a counter trend move again that moves against the 5 waves. Same thing here, same thing here. Now you look for counter trend move again. Then from there you look for another 5 to the upside. This is how simple Elliott is. Now the relationships and stuff, the way it works is 100% is a 1 relationship. Okay, it depends where the third was ended. And then your other 4 versus 3 relationship are always going to be from there. You have to make sure that you draw your fibs from here to here, not from the bottom up.
So just for that, right? Let's say you have a wave 2 that is like a flat, right? So the end of the wave 2 is not actually the low. So do you draw your fib from like the end of the wave 2, or do you draw it from the low of the wave 2? Does that make
Low
sense?
of the wave 2. You're looking for only 2 relationship now. 4 versus 2 and 4 versus 3. A correction, a counter trend move has a relationship with wave 4. Wave 1 has a relationship with wave 5. 3 is going to be always going to be on its own. That's the way you have to look at it. Okay?
So I guess my question is, like, let's say you have like a running flat, right, for wave 2.
Yeah, it doesn't matter. You can, yeah, okay. So you saying that if you have a running flat, your wave 4 will be the same or could be anything else?
No, no, I'm asking, let's say, like, can you draw like a running flat as a wave 2?
So I think he's saying where is the lowest point you grab from to measure tree.
ABC, let's say, uh, so or like a running flat, the C is doesn't extend, right? Like it's yeah. So do you draw from the point C or do you draw from A? Because A is technically like the low point, right?
Correct. If you have a running flat here, yeah, so after this move, you just gotta have to go all the way back up like this. Is to see if your wave 3 ends here, right? And the running flat was only a 2 3.6, let's suppose, and then you just had a big, huge move to the upside. You have to draw your fibs from 2. Wherever the wave 2 was ended is where you're going to draw your fibs from that low to that high, is to look for that 38.2 and 50, not from this low, because you're looking for this wave 4 now. Okay? And then from wave 4, you look for a one final push up to the upside. The counter trend move has to move, it has a relationship with wave 4. Let me give you an example. Let me show you the Tesla chart. Yeah, let's do it live. Okay.
So Mo, if you can add also like when does that the counter trend will end compared to the 2 or 4 or 2 itself.
What I see here, okay, is a 5 completed waves to the upside. Okay. Let's do this thing live. So I had this thing laid out over a week ago, as you guys probably know it. Saw it probably on Twitter, or I even did on a chart room as well. There's going to be a very rare chart like you will ever come across that you ever gonna see me putting a red box. I don't put red boxes that often. When I do, pay attention to it. There are three colors that I use. We have a yellow zone is where we buy, is where we look for entries. We have green box is where we try to target, and I have a red one. I don't use red that often. But the only time when I will starting to see a cluster of fibs are starting to stack is where I will have a very, very good chance that thing is about to come to an end. Let's talk about Tesla. Here's your wave one, smaller wave one, wave two, retrace right at 30. Now you have to pay attention to one thing, okay? Tesla works really good with fibs. We just talked about Meta, Nvidia, and all those stocks, okay? You just gotta have to have a right wave count. Here's your retracement down in two. We took out this high right there. Third wave went to straight to 161.8. That's a textbook print right there. Now, stock was an uptrend, right? Strong move after elections and all that stuff. So we know the story is. I tried moving. Now, what you can do, you can put this wave 4 here as well. Okay. What I mean by that is go 1, 2, 3. So this green 4 comes here. And then from here, you're going to have to squeeze 1, 2, 3, 4. Oh, sorry. Let me do this. So from here, you can do 1, 2, 3, 4, 5. You can do that. That is possible as well. Either you put the 4 here or you leave it here. I tried changing it both ways. Both ways are right. Okay, this is some sort of a complex that would trace right to that 23.6. And then you just have this extended fifth wave to the upside. Or you can just keep the 4 here and count this. So if you do this, I don't have it like this. I just gotta have to change it. And I can, as a matter of, I don't know that. Oh, come on, why did it change? So the fourth can be here. And then you got 1, 2, 3, and then you look for some sort of 4, and then you look for one final push right back toward this 500. So we can do that. I can change it for you. So we'll go like this. Move, you have to move, get rid of all this. Gotta put a 4 right there. See this 4 right there, get to 38.2. So the both ways are right, you see? Tesla is a good stock to trade, but it's just you just gotta have to have a right wave count. It's gonna give you these textbook prints, to be honest. And then from here, you have an extended fifth wave like this. So now what you're trying to do is put a 3 here like this. Get rid of this. We don't need this for now. So if you want to keep a wave count like this and thinking that Tesla can make a one push to the 500 mark, because it's only 488. So now let's do this. Now we're gonna make a case for this one. Let's do an ABC here. I'm gonna just change. Okay, so we got diagonal here. If you really serious about Elliott wave, you should get motive wave. That helps. So if we do this way, you see the third wave travel from 161, 200, 261.8. You know what happens at 261.8. That's one way, okay? You're not gonna break this without any sort of a setback. 200 is there, it's just one thing's going to get overheat. Yeah, once that third wave is gonna get to that 261.8 mark, that's it. That's just gonna take a breather. So now let's do this. Now let's say we keep this third wave here, and now we try to make a case of this fourth wave that has a relationship with wave two. Let's see how much is the wave two retraced. 61.8. Wave three typical, okay, that ends there. Now we'll run for 4 versus 2. Right now, we already know that this wave 4 is bigger than wave 2 because it has already went below 440 right there. You see, it looks bigger, or you can just look at them side by side. We can tell right away. It looks, it's a bigger wave. Second relationship, we can pin this. We can bring this 4 versus 3. Now we have this. So the Tesla major support, which was what 3-year high, with 2021 high was 414.50. That's the Tesla major support is. Tesla needs to hold this zone area really well, because once you start backing off like this from this kind of a, because you have to look this. Tesla took out a 2021 high after 3 years. It's December of 3 years, right? Here. Right there. So now you go back, what I was just talking about, IWM before, that it took 3 years for price to go right back, and it went by like few pennies, and it just backed off 11%. So that's the double top right there on the small cap. Well, I don't know when is gonna, but it's gonna get taken out. So now we already know that third is right. Fourth wave right there has already exceeded more than 100% in relationship with wave two. Now we're sitting right at that the 38.2, which is at 418. The 418 mark with 414.50, which is a 3-year high, that's your zone right there. That's your one that you gotta have to watch now. This. And if the price really is trying to push lower, it can get to that 400 mark. So if the price do come like this, okay, and then it has to find a floor and to make a move high. You don't want to have, can be a triangle or something. Yeah, it is totally possible. I can leave this wave count like this, and then you can just look for this 20-point window. That's it's a 423 right now. So you just look for this zone to see if Tesla can find support here. And then from here, you look for this one final push back to the upside. So there's no point for you to project any upside now anymore, okay, unless we take out 488, okay? So once we break this, then we'll project 5 versus 1, which is this. So now from here, we can see like, okay, well, can we expect some time? Okay, let's see what it looks like. Okay, so let's do 4 versus 2 time relationship. Look at this, that was right there. So when you take 100% right there, that pairs with this. Now, the time is only a guideline when it comes to Elliott wave. Ralph Nelson Elliott has not spent time and has not put out time analysis on his theory. So time relationship does work if you have the right wave count, but the wave count can change. And then the time and price, one can come first and the other one's going to come second. Like in this case right there, the 100% time relationship. Now, if you take the price of a same 100% was met right there at this bar, which was December 18th at 1400. It was right there. That's where the 100% relationship, I'm sorry, the price was met with this. But the time relation, the time of 100% relationship goes out 2 more days up till here. You see? So the time can come, your price can hit first, then the time later. But when you have a time window like this, there's a pretty good chance that the price is not going to rebound back to the upside unless it get to at least finish up the time what this one spent. Because you don't know how fast the price is going to drop, right? So you can do it manually. Okay, you can do it that way as well, or I can just show you. I have the fancy software. What you can do is you can just do it manually. What I mean by you can just take range like this. You measure your wave 2 like this. It depends on which time frame are you working on. It's gonna daily is gonna have 2 bars. Okay, this is 1 hour chart. So there's 15. So now you take 15, copy paste, and you put it right there. Okay, that gives you a same time frame. So you look for 15 bars here, gives you 15 bars here. So now you do, you see how 100% matches that line right there. That's 100% relationship of 4 versus 2 with 2 versus 1. That's the minimum. But the point here is that the price which hit the 440 mark was at this bar. No, actually at this bar. Okay. So for the price to come from here to here, it came down in 4 bars. But this one took 15 bars. Now you already know, like my price has already met in 4 hours, in 4 hours against 15 hours. Now you have to do what? You have to wait for the time. So the price is going to consolidate, may push this and this. You see, now it completed the time right there. That's your minimum time relationship with price and time. That's how you compare them side by side. Now from here, you look for 4 versus 3. So you pin this one. There goes your 4 versus 3. That goes. So 4 versus 3 is what? You have 23.6. That is already out. 38.2. We'll need this. We have 38.2, which is right there. Let's mark this one. Now this one goes up till December 26th. Now this time relationship, the price is 418. You have to watch this, 38.2, 38.2, right? So the 38.2 is exactly where we are right now. but we have this much room left. 100 we just completed. The 15 bars would complete it right there from the top to here. Now, if we're pressing here toward this 38.2, the time relationship of this one is goes up to December 26th. So this fourth wave can kind of like there has a pretty good chance it can just kind of gonna can go sideways. Only if you moving this fourth here. If I put the 4 here, I will just call it as a blue 1 and just put it up here. You either fighting this fourth now, it can work, and then from there you can just look for one final push to the upside. If that happens, you still gonna be due in 3 wave to the downside anyways. So would you so you'd rather deal with this wave blue 2 now and just get done with it, and then you look for the upside, or you just fight your life over doing this, and then you take another 3 wave decline to the downside, you know? So that's why I was gonna go back to my old one, is to see, I think this is the way to go, is for the only reason I did that. Oh, gotta go back. Come on, bring my old thing back. Just rewind this. I don't have to. Oops, stops. Doesn't want to let me go. Okay, that's fine. So I'd rather do this. So the reason why I already laid this thing out like this is this. You have a 100% relationship, another 100 here, and you got a 161 point. I was like, this stack right there. I was like, I don't think you're gonna break this one anytime soon. You're gonna break that thing rule that, that easy. So I would rather keep it like this, and then I laid out this. Now, if I go back to a daily wave count of Tesla, swing is down now. See? So false. But it made 3 lower bars. That's the low, and yesterday was the low. So when you have a 3-bar swing that goes down like this, 3-bar don't reverse 3 bars in the next 3 days. It takes a few days. It just turned down yesterday because it made a new low. That was the high of the yesterday high was 447. The low was 417. So the swing is turned down. If the swing is down, I'm not gonna make a case out of a fourth wave. It's just not gonna work. That's why I keep my swings on a side. That confirms my counts. If I don't have the right read on those swings, I would just because there is one thing that I can guarantee you. A wave count and a GAN swing cannot be wrong at the same time. Said. If I show you a swing and if I show you a wave count and if they happen to be wrong both at the same time, I'll write you a check 100 grand. You know? It's just not gonna be right. It's not. They both cannot be wrong at the same time. That's I'm 100% positive. One will confirm the other because they're two different strategy, like two different ways. The concept is about the same, going up and coming down towards the retracements and stuff, but swings are I rely on swings way more than a wave count because wave count can change, you know. So now the question is, if this is the completed wave one, now we have a downswing. So what will be the downside retracement that we look for? Here's your wave. So we take the 212 to this high. The run was 130%. Okay. And the point is like, are we just do a simple sort of like an ABC move like this, something like this? We just need to target. Now we need to draw our retracements 2 versus 1, something like this. Now, how this thing comes, we don't know that yet. We'll just leave it like this for now. Now we'll look for the external retracement. This is pretty much done. If that's the case, now we need to look for and hope for, like to see like, okay, how is it going to be an ABC? It's going to be a WXY. It doesn't matter. That's just irrelevant. What we look for right now is 23.6 against this entire trend wave and 38.2, which is the second one, a 50% 321. So we have 3 external retracements that will move against this entire 130% move we just had. Yes, what we did before on the fourth wave by putting it here, counting this thing as a 1, 2, 3, 4, 5, and you get to a one more final push to that 500 mark, that is possible as well. But the fourth, this one right there is starting to, it looks okay. But if you don't want too crazy big fourth wave against you too, you're gonna, if your fourth starting to get bigger in magnitude and length compared to your wave two, you're most likely is that the show was over here. Now you're just trying to see if you can just squeeze that four and you can just hope for the thing to reverse back on you to give you a one final push. Because after four, you're just gonna get one push to the upside, and that's not guaranteed. That can be truncated as well. you know, truncation happens on a very rare occasion. That's just not something really common. These stocks, like especially like Mag sevens, you don't see truncations on these stocks. They're very steady stocks, like, a lot of volume, much better spreads, and they're they're the leaders. They don't they could make double tops and things like this, but truncations is not very common in Elliott wave. Um, if we so right now, what we can do is we're gonna put a box first here. I don't have to open this much down here. Right there. So what we look for now is 415, 3-year high, 23.6, 400. Okay. So this is gonna be our zone. Are we gonna do some sort of like an A here? Like, I don't know. I don't know what it's gonna be. I don't even know how to count this. I don't know the zigzag. Make this thing as a, we can do this. Diagonal A, up in B, take a leg down and see. Now that C comes down to 381 mark. That's the relationship of A versus B. Sorry, C versus A, meaning that you look for two measured moves. That goes up till here. There's so many ways you can, because, well, we don't know. This is all blank. There's no, you can't sit and make wild guesses. It's going to be an A, B, C, or W, X, Y, whatever the case. I don't care. I don't care none of that stuff. All I care is this 23.6 and a 3-year high. This little window, price is going to fight. I can give you that. Okay? Price is going to fight this zone. You can see right there. It broke above, came back down, retest that 415, took off. Came close, bounced, made another low, bounced, made another low, bounced, and now is trying to make a fourth attempt toward this support right now. This is the major support sitting right there. So we're going to watch, see what happens. The swing is down. That just turned down yesterday. So now we need 3 days for the swing to turn back up. So you need 3 higher bars. 3 days of higher highs will turn the swing up. So when the swing turns down after 3 days, it stays down for a few more days before it's starting to, unless it makes a sharp reversal back to the upside, that can happen as well. But this is, I don't know what is this. I mean, I updated the chart room here, and here. So I did the same thing here. I even did this here. That was the, see, I was debating between this 4, and I kept it here, and then to get this 5th to the upside. I mean, this thing went nuts. I was looking somewhere around here. Whatever. I mean, I had it projected like this. That was in the 6th of this month. And then I was like, I can either put it here, then try to count. And that happens to be this. So then from here, this is 16. So we rally like this. So from this 16, we went all the way to the same, the red box that I have, the 49502, 492. And we just put a higher for the 488 now. So we came super close. 3 points off. It's okay. This is a very strong fibs right there. This 100 relationship with 161.8. That's once you have a cluster of fibs that started to stack against really, really close, yes, you're gonna have a pretty thick wall right there. Right? It's gonna take a bit of a breather. So from here now we're dealing with this. You see the 490, 492, 502. So the high was 488.55. A little shy of that 100%. And now we're backing off. So how much is this down? 14 and a half. So close to 15%. It's coming close to this. I'll see what the Monday looks like. And then so you can Tuesday we can, I'll watch and see if we can try to to play. If I could at least make a case of some sort of, I don't know what is that. I mean, I mean, I don't know, leave it something like this. Play the bounce in B. I don't know what is that. I can't just throw labels and just make wild guesses. I'll just look for external retracements. That's the only way you can do that moves against this giant move to the upside. Okay. Now we do 2 versus 1 relationship here with time. It's gonna throw you off, but there you go. That put you at January 10th. You're gonna move all the way here like this. You wanna do this. January 10th is where you have 38.2. We don't know how that thing is gonna. I mean, a minimum time is 38.2 that matches with this 355. Okay, so basically you are looking, doesn't mean it's gonna get there, it can stop anywhere. But well aware, Tesla is it's a good stock. You see, there was a liquidity zone that Tesla had. It was struggling really, really bad from here. You see, that's the where the third was ended. Made a move lower. Trying to break, reject. Another attempt, rejected. Another attempt, backed off again. Then finally took off. Now you gotta have to pay attention from this 61.8. Is this where your typical relationship is? How many attempts the price is trying to make here, and it just keep failing and failing, right? Look at this zone. It's what you call liquidity zone. Liquidity is gonna get swept out, but it's just a matter of time. But when you have several rejections, sorry, when you have several rejections like this, especially on a Mag 7 stocks, it's gonna clear off. Because these stocks, they don't form tops like this. You just have to remember that. You know? No Mag 7 stocks will ever form a triple tops, and then you're just gonna see like a 30-40% decline. I mean, just doesn't. This just when you have so many attempts, like with the key prices keep rejecting, it's gonna sweep that thing up. You know, it's just where the liquidity is. So we're just gonna. I'm not worried about this for now. Well, don't know what happened. It's a buying opportunity. 100%. Any weakness that you're gonna get here from this 400 mark, it's you have that third coming. After that, we have 5 waves up, 3 down, or whatever the case is. WXY, ABC doesn't matter. Just look for external retracement. Then you got that third wave to the upside. So you just gonna measure the same exact distance here, which is this. This is a right wave count. I know that. 130%. Because it's the same wave count I have it here. I laid this thing out This is a very advanced. Let's just go. I gotta change all this. This is a very advanced Elliot here with the correction. Okay. This is a flat, a zigzag, and a triangle Y. You know? So I had a doubt that the it's just taking that long. This is the you call triple combination, but this is the alternate wave of the correction. We talked about it a week ago or so. So you just combine two separate corrections with the connector X. Take a flat, zigzag, triangle, or it could be another zigzag. So Y wave can be a triangle or it could be a zigzag. So this one works really well because you have this decline all the way from 414 to 101 and then you have this X that goes right to the 78.6 mark. Typically they're on like 61.8, X waves, that's when the normally stops. X waves. X wave has a very Y wave has a very strong relationship with 161.8. When you have an extended W, complexes are very tricky. You have an extended W, you can have a shorter Y. Remember that. Okay.
Mo, can you explain the
When you have an ABC move like this in a corrective wave, and when you have an X wave like this, when you have an extended W like this, like the what you see here, the Y wave here only go to 61.8. The Y wave 61.8 has a very, very strong relationship. Okay. Most of the people, they're looking for a measured 100% move. You can get it, but the odds are very low for that. Most of the time, when you have an extended W, you have a shorter Y. When you have a smaller W, you're going to get an extended Y. Okay, these complexes works both exactly the same way most of the time. One side will be bigger than the other side compared to the other one. So you have a shorter W right there, then you're gonna have that 100% relationship, even slightly more.
Mo, can complex be nested? Like let's say within the WXY, can you have WXY nested inside?
You wanted to count, you want to make WXY within WXY?
Yeah, let's say like for this wave X, could it be instead of ABC, could it be like double zigzag?
No, because this is a clear zigzag move. You have an A wave right there, 1, 2, 3, 4, 5,
Mhm.
3 here, and you have a clear 5 wave up, zigzag.
Okay.
you know yeah, if you can count a simple zigzag, yeah, you can count simple zigzag. I
So
mean,
the complex wave WXY, they're made up of simple waves, right? They're not
correct.
made up of
Or
complex.
yeah, complexes are very tricky. They're just I had look here's the thing. There's a lot of guys even question me this thing on a Twitter because a lot of these guys don't even know this correction, to be honest. Okay, it's a very um this is way more advanced, Elliot. A lot of guys have this on on Everybody wants to have a triangle like this. Dude, what's going on with this? Like this. So they're like this. So they're going off like this. They're taking this thing as an A, B, C, D, and E. Putting right there. Okay? Now let me tell you the problem there is if you do this. If you put an E here, all the guys out there, this is what they have. Let me just mark that. Taking 182 low. Okay? Because mine is 212. So if you take 182, I gotta go back to the same one. Make this thing bigger. This is where most of their people triangle stops. I just want you or anyone to show me a 5-way move here to make this thing as a 1. How you gonna make it? Okay, let's do this. So 1, 2, 3, there's your overlap. Okay, let's do, so if you're gonna put 1 here, well, how are you gonna make 1 here when you have a 3 waves here? That's wrong. So if you're gonna do something like this, where's your 4th wave? Okay, that's 2. That's 3. Where's 4th? That's wrong. So how are you gonna count this move? A 5-way move to put 1 here. It's not gonna work. I already looked at it.
Could you possibly make it like a expanded diagonal?
No, it doesn't apply that if you do that. Let's do this. So if I do this, put a Y here. First of all, this retracement goes away. If I put here 1, put 2 here, now how are you gonna count this? A diagonal like this? Does it look normal?
Yeah, something like that.
No. Expanding variety diagonal is very rare. Keep that thing in mind. I'm not saying that it doesn't happen. They do, but it just expanding variety. Expanding variety they consider as a volatility patterns. Okay, volatility meanings like they expands, right? Like a leading diagonal by the look. Okay, it's like this. Price travels like this. The expanding is the price just opens up in a certain range and it just started to expand, you know? So they call those what you call those megaphone patterns, you know? The megaphones are the same way. You just like blasting the megaphone from here and it just boom, and then you just have those wild ranges. So they're very similar to the expanding variety, the diagonals. They're rare. But the point here now is now worse. Okay, let's say instead of starting from here, so we can do this. Well, your 5th wave is yes, overshoot all the way to 161.8. So let's say you do this, then you got your wave 2. There's your wave 3. So you can do, here's your wave 3. So you can count 5 within that 3 like this. And you have to same 4 that I'm just talking about, put in here or here. So if you put it here, this is an extended fifth. So now you hope for to see if this can happen. Something like this. This is fourth we just talked about. It's already getting bigger. So you deal with third one to the upside. It has already exceeded 200. So you're looking for this to get to that 261.8. Then you look for this wave 4 to match up with this. Then another 5 to complete 1. I mean, it's possible, but you gotta have to wait. I don't like this, man. The only the reason why I don't like this, I will tell you this. Okay, I gotta go back to my one. Come on. So the only reason I don't like this one is this. Gonna make the time short, that's why. Let me show you this. Show you some advanced Elliott. You take this measure move, 294 bars. Compare this from this high to the low that you're talking about here. See, it makes it shorter. It's 263 bars. Where I kept it here is 320 bars. 319 bars. You see the 319 is bigger than 295 on time. Triangle usually takes longer time anyways to complete. So that's why it fits right. Other thing is this, typical retracement of E versus D is 61.8 is at 210. 23.6%, the 4 versus 3 that we have on the wave count is at 23.6. So these two matches at as well at the same time. So if I put a time here on this E wave, the I'm few days apart, short on time, but I was close. Right there. So the E was 61.8 was right there. So it was what chart is that? Daily. So 1, 2, 3, 4, 5, 6, 7. So 7 days. So the time relationship was at October 15, and the low was October 23rd. So it was close, very, very close. So 7 days apart. So this is the reason I want to keep the wave count the way it is by keeping it as a flat triangulation in Y wave. And then from here now we're trying to count this five waves to the upside. So it has room to run. Well, definitely has room to run, but this pullback that is coming, when I post, I don't post, like, I don't like show a lot of these labels and stuff because some people have never seen it. So what's the point? I just mark this one simple so people can like read them. Hey, what it is. It's just how the correction unfolds. And that's what it is. So I am if I could get a test here, I mean the premiums are pretty expensive. Tesla has I think has a higher ATR, 67 point per week. So the ATR is high as well. I mean, it's moving, you know. Now if you look at the weekly chart of Tesla, that's the thing. See, Tesla didn't even have a single down weekly bar. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 weeks now. The stock has been making higher highs. So Tesla didn't have one single down week in the last 9 weeks. So keep that thing in mind. So 9 weeks, okay, 4, that's 2 months. So 2 months and 1 week. It's a long time, right? I mean, it had few outside reversal bars for these weekly ones, but this week high was 419. I mean, what close? There was a weak close for Tesla because they sold them real hard at the close. This one in the Meta. Yeah, I wouldn't be surprised Tesla's gonna hit 400 mark. You know? Okay, it'll be fine. Nvidia, this is the one I'm hoping. I put another trade on yesterday. I'm breaking that trade into a. I originally put the trade on. That's the thing is still up. Then I had one more that I did, the 8 swing. I was like, I don't want to really want to. I was kind of hesitating that doubling my size on the same trade. I paid off $900. I was like, that's a good thing. And now I put another 5 more yesterday to see this rotation needs to play out. It's looking good. I really hope it just don't go this way. That would be gonna be nasty. I usually wait for one more day, but I got in yesterday. I think the setup is there. Just need to crack 136 or so. This rotation has to work in our favor. That trade will move. Nvidia is gonna make a move. If this rotation will somehow lose momentum and it's just trying to go like this, and that's gonna this thing is gonna then it's gonna take more time. But the point is, regardless what the case is, okay, it's gonna has to go to it will go and do the clockwise, rotation around the clock. So yes, it's gonna test your nerves and you're gonna be super patient. But as long as you have some time, you just gotta have to give some time and just wait. Wait for this rotation to play out. It will. This this is a disaster. So this one is gonna take some time. This one is right at 52 weeks low anyway. So Meta looks weak. Microsoft losing this. Apple new all-time high. Beautiful. Amazon. You see a lot of them. They're starting to curve down. So the point is now the semis and Nvidia, they really correlate, like they're moved together. Okay. This is the one that's gonna move this. Okay. There's no AMD is gonna help semiconductors. That's the rat. This is the one is gonna move. Broadcom is gonna move. So Broadcom did the work after those earnings. Okay. TSM is good. And then the first one is Nvidia. These are the top three leaders. I've been talking about this thing for several weeks, and I'm not dying to trade any other semi names either. I like these three names when it comes to semis. You have to look at this way, okay? I understand they have the different data model. This, fine, and everybody can come on a TV and make you all the promises in the world. The AI boom for this year, what does it tell you after 4 quarters that we just had this year? Okay, there's only 3 companies, okay, are showing the positive results and the growth. Okay, Nvidia, TSM, Broadcom. That's it. So if there's enough demand or there's enough, the other companies would be showing us same performance based on this AI boom. What the future holds, nobody knows. What company is promising, they can promise anything they want. They have to. They have to make sure their shareholder is happy. They not start pulling money out. Okay, so they will do whatever it takes is necessary to tell the general public that we just have the best business ever. It's not. I don't look at things that way. Sure, fine. They have the data model, they have the future growth, and every company has future growth. There's no company out there are telling that, yeah, we just don't have future. Well, then why are you in a business? So I only look at three names that has turned out really good this year with this AI is this TSM, Nvidia, and Broadcom. That's it. These are the only three stocks that I would be very interested in trading next year as well. I'm not touching. I'm not. Don't expect me to buy. I don't care about AMD. AMD can go to 1,000. I care less. I don't want it. I do not want that stock. Just I want. I want to trade the leaders. What was? I mean, look at this. Intel 61%, AMD 20, Lam Research 8, 6.94. What AI demand do they have? 5, 6, 8, 9, 11, 80. I mean, really? Oh, this is a fraud right there. Nobody knows what's going on with that company. I've done really good. We had a lot of trades on this year on this stock. Did really good. But just after those news about their accounting issues, I was like, oh, that's it. This thing is toast now. Too much negativity on a stock is pricing in. You see that? 4 quarters this year went by. I mean, yeah, all these companies are promising big returns. You know, this is ridiculous. The CEO just like, okay, that's fine. I cannot do anything. He retired as we gave up as well on this company. It's just he even went to what the president does the White House few times to see if they can give him the money because they don't, if they want to build all the chips here and stuff. Like government even like you couldn't. I don't know. The Intel just has no demand, I guess. Yeah, they're all good. I mean, AMT is good. Qualcomm, yeah. I mean, we can put what MU here. There's MU 5%. He just a year, 1 year. This is all you have to show for this AI boom. And the same AI boom, the market is up, the S&P is up 25, 26% year to date. These stocks, I just don't see it. I just don't have, there's nothing to prove. The only company that has to prove is this. That's the big daddy right there. And this one. Yeah, think where you're gonna put the money in. It's just weakness. Bitcoin is, oh boy. Yeah, look at that. This one, 108. This was the trade of the year this year. Nailed the Bitcoin. Very, very proud of myself. Swear to God. I mean, I'm buying my Coinbase here. I mean, went to 80, then 88, then to 95, finally to one. This 108 is a 261.8 extension. I was like, you ain't gonna crack this one anytime soon. You know? Yeah, you're not gonna break 261. We just saw, I just showed you on Tesla as well, making that case for that way forward, get to that 261.8. No, 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 no. You're not gonna break that one that easily before any sort of a setback. Yeah, Bitcoin is in a pullback. Bitcoin is flat. Look at that. It went up to make that push. Now you see, completely flat. We still got 2 more weeks to go, but this is weakening right there, right there. So this is some sort of a second swing is starting to come into a play. That'll take few weeks for sure. And once it settles down in two, it depends how much the two goes. Here's the thing about Bitcoin though. Bitcoin works really good with fibs. I don't think a lot of people know that. I'm just I'm doing my I just do my swings. I don't have any wave count on this, so I don't need it. You want to go up, I can give you a levels. So what difference does it make? I have to sit and label every damn thing all the time. You want to go up? I'll tell you which level, which high needs to break, way to to get to the top. I mean, you can just keep it that way. I'll make the wave count when I have time after the close and stuff. But I like this idea of keeping all these mag 7 in one shot, you know, like this, like all of these. Like we just like I updated these ones. Like here's Apple, Microsoft, Amazon. So they're like all like in a over hour, like sorry, the 1 hour time window. You see like Nvidia still there. I don't have to do anything to it. So you'll know exactly where the support is, you know what chant like price needs to break. Where's the 611, 8.6. So this is all here. So I don't have to sit and change this thing every session. It doesn't work that way. Just leave it like this. Netflix to this, The thing Meta just I already had it down as an ABC. We just looked at it through before. So these are good. The same thing with Tesla. Just leave it like this and see when I'm watching, I have them. And when if there is gonna be any next update due, and I'll just update all 7 of them in one shot. And then this way we'll have full Mag 7 package, and right in front of us, like Apple here, you see, like Apple found fourth, and now it made a new high. So let me see where the heck is Apple is. You see, it's the same thing that I laid out there, right? You see that wave third came back and forth, now made a new high. So diagonal one down in two. So the minimum distance, at least for this Apple, for okay, again, we're looking for that 100% relationship, right? It's 266. So we're at 255. So there should be at least a minimum measured move from this low of 196 to the same double top. Remember we talking about this? High here, rejection, double top, rejection. Look at this. Always pay attention to your largest percentage decline. You can make a lot of it from if the price managed to make the uptrend back again. But if you kind of come across a Mag 7 that end up making a double top or a triple top, it's just a matter of time when they're going to clear it. But it just makes it really difficult to fight with options, to be honest. I mean, you got to buy a lot of time. Just, that's all it is. So pay attention what I post. That's all it is. I'll I'll show you the direction, and you just stay patient. So the minimum measured move for this 1, 2, 3 is 266, right? So from this wave 3 projected from here, from this wave 2, to have a diagonal 1, down in 2, up in 3, 4. So we should have a bit more room to go to at least to get to a 100 mark. So from 100 mark, I mean, I would love to see this thing goes here to 300. That would be a 3 versus 1, meaning this 3 to get to at least, you see that I got 1, 2, up in 3, then 4, then 5, you know? But I'm not, let's get here first, and then we'll worry about 161. But for now, we'll just deal with this, just to play 2 measured moves, you know? I have shares. Well, some of you, I know, like, here's because some of you guys it comes in between, in the middle of the year. Some of them are coming in now, and I have other guys have been with me for over years and years. Yeah, I bought them in March right there. This is our position right there, 65 shares. I bought them 170, 145. This was in March entry. Sorry, in May. Yeah, I loaded that one. I'm buying 65. This is up like over 5 grand. Yeah, it's over $5,000 now. 65 shares. Yeah, just from here, look, throw it up, down. This is all year. I know dips are painful. I get that. I know it makes you mad. It just, what the hell? You just want to break things. And I understand. It's just the frustration. Everybody goes through that. You're not the only one. You think I haven't seen sell-offs before? In 18 years? I've seen crashes before. What are you talking about sell-offs? I mean, I know it's painful. It hurts. But you just gotta stick to the same size of trades, because if you end up over leverage, like you upside, like open up a bigger size position, if you have to take that kind of 1,000 point drop in a one single hour, like hour or two, yeah, it's gonna be really bad. That's why I don't open one trade more than the other. I just try to keep it close as possible. I'm not Options are dangerous. It's just what people don't understand this thing. It's very dangerous asset. Just use it as a hedge, you know? Buy the long term, play options as a hedge. That's what I like to do. I can open up a $50,000 position, it's not a problem. But why would I do that? You know? I don't want to play too aggressive. Because I know the fact, the 90% of the people, the traders, are losing money every single year trading options. 90% of them. They're just like making a world out of 2, 3 trades if they're going to win them in a row. Options are just risky, they're very, very dangerous. You just got to be careful what you're doing. Don't just throw money based on the one chart, this. I mean, we're all going to have losses. But I try to keep them as low as possible, but I try to win as many as I can. But oversizing and stuff, I'll buy shares all day long. If I want to dump 50 grand, I'll dump 50 grand into a Nvidia. I'll put, that kind of money, I'm willing to buy shares. I'm not going to open up 10, $15,000 size positions on options. What if I'm wrong on the next three trades? What do you think is gonna happen? Now I'm down like freaking 25, 30 grand. You know? And you think it's easy to recover 30 grand back? And then the the day you have to go through, and then you gotta have to sit and think and ruin your head over like, oh my God, just took a $25,000 hit. No. I want to put myself into the spot. Anyway, trading is fun. Keep it that way. Define your risk up front. Play the long game. It will adds up. It's a number game. You have no idea how fast this number adds up. Nobody's happy to pay to get 500-600 bucks profit. Everybody wants to say like, oh, I want to have 6 grand. Okay, well, it's not easy. Sounds easy. Ask me every day. I manage almost close to an $8 million for people. I hate it, to be honest. I just hate it. Too much work to structure differently, put some hedges on, and oh my God, it's nasty. I'll sit and watch 30, 40, $50,000 changing in front of you every single 5, 10 minutes. It's crazy. Yeah, I mean, I have huge runs as well. I've had made over $100,000 in one single day as well, but I don't show and advertise numbers. It's not my account, so I have no right to do that. That's not how I do things. But it's the way it is. I made $1 million just alone on futures, on Bitcoin futures alone, on that run all the way back up. That was a nice trade. I think this is what I'm working on, and then we're just gonna go. I'm going through these ones because I am. Here's what I was gonna show you. Apple is fine. This is such a good looking pattern. This is how it's working. It took me, I remember that night, it was almost close to like 11:30. My wife was like, what are you doing? I was like, nothing. I'm just trying to find something. I found this, this range, 33.4, 54 bars, 378, matches exactly the same way. You see the structure ABC, the WXY, same thing at WXY. See, 32, 52, 364. Look at the rally from here that we had on Apple. This is a weekly though, not daily. So each bar is 1 week. It's 125. It took 875 days of 160%. So from there, I project the same thing. So just copy those two boxes. It gives me 320, but 254 now. I think we're gonna get there. Just a matter. This is repeating side by side, as we can see it. You see, like right from this low. And from this low, you just gotta have to measure, and then you just need to make sure you just take out the high of this decline, which was right here, and then you just get this upside, and then you did the same thing here, and look how the price was here, up, down, up, down. I was like, it's gonna clear. It's gonna clear. That's why I bought this shares with you guys, this March. It's like, okay, I'll buy it under my wife's account. Just put the trade on this one. And for March, I was like, Apple to be down one full quarter. I was like, yeah, let's get it for the second quarter. Let's see if we can clear this chop right there back and forth. So this is weekly bars I was watching every single week, and then this is another dip that I took, but it's okay. I was making his way up. I just wanted to see if I can complete this time frame. this time, and then the price projection, which I took from this low, the same measured move from here to here is 320. So if we can complete the time and price, I hope we can hit the price first, then time, but who knows? We'll see what happens. It doesn't matter. So just gonna match these two boxes side by side. But I mean, if we go this, my wave is gonna definitely take us to a 320 mark right there. So might play out. And we'll see. We're gonna get to 266 first at least. Minimum. That's what we need. Then we get some sort of a fourth back from here. If it's not, I mean, I think we're gonna end the year anyways. We only got 2 weeks left. And then if Apple's trying to make a move next year in January up to 300, that would be ideal. I could see if they could report some strong earnings next quarter, for next month. I could see Apple rally to 161.8. Yeah, if we get to this, yeah, then the 320 is gonna look very, very promising. Yeah, we might, I don't know. Because according to that time, that goes out until June. Looking at the bottom here. It may. So Friday, yeah. So weekly bars. So yeah, May 30th. So that one has 25% upside. So that's almost a 1 year, 25. So right now it's at 32 for the year to date. So back and forth, kind of chop around. If it can manage to, Apple can stay up for another year. 25%. Yeah, I can see it. But that's my adjusted cost, 23.52. Asked after those splits and stuff. Well, that's the Apple had few splits. This is what I put it on. I was a Twitter at the 156, right there. This is when I bought it with you guys here in March at 171. I have plenty of shares and just don't. It looks good. Apple is Apple. You cannot go wrong owning Apple, to be honest. Apple is a freaking beast. I don't, to me, this is a treasury bond, to be honest. I don't even consider this thing as a stock. Every portfolio manager, the guys, the people who have massive amount of their portfolio have Apple in their portfolio. And Warren Buffett was dumping all these shares. Remember those news? No idea what he was doing. How much upside that you're losing. What I was gonna show. Sectors. Well, this looks bad, I know the markets were under pressure for healthcare yesterday started to look I think it's due for a bounce. Healthcare is very, look, everything is on one side except for these three, it's a very weird December, to be honest. I don't know, the timing with all of these sectors are just like way down. Like, look at this right there. Let's go through just to see a sector like the stock that you're holding. XLY. See, it's starting to pull back in a wave too. This is our second swing. So this is why I'm trying to make the case on Tesla as a second swing, because Tesla is the second largest holding of XLY. Keep that thing in mind. Amazon is the first one, Tesla is second. So this is due for a second. Look at healthcare got killed. Healthcare was down for 8 straight days. Oh, look at these bars. Massive flush. This UNH, the United Healthcare put a lot of damage to this sector. That is almost 1% for the year now. It's wiped off everything. So healthcare now resistance right there. So here goes your 140 mark. So you got 2 point, well, they've got a bit of a pop, kind of faded. You got 142. VWAP sitting at 141. So I mean, if we make a case here for an app for a healthcare bounce, I don't know what kind of a bounce, but it needs to clear some of these hurdles. This is just a lot of beating. Utilities slightly above 200. Now utilities have taken on quite a bit of a hit as well. See the swing down is 10.4. Look at all this full decline. Utilities had a massive, it's still up 20%. It was up 30 basically up till here, and it just gave back this 10%. Now it's down, it's only up 20% for the year. Real estate is bad, 1.82. You see, it has a failed swing, and now it's starting a full swing to the downside. It is below 200 EMA as well. So this is bearish. This sector is, and healthcare. Healthcare 200 EMA sitting right there. Healthcare is down here. This is bearish. There's two. So these are two sectors. Okay. Healthcare. This utilities is near close to 200 right now. It's trying to test it. Got a bit of a bounce yesterday. Real estate below 200. Throw a. So this one is done. Real estate was down almost 8 days as well. You see this spike right there. 8 days. And rates are going nuts. XLP, consumer staples, failed swing, took out this low. Now it's at near the 200 EMA as well. You see, I mean, there's these sectors got hit hard this month. Very, very hard. Technology now, yeah. I mean, it's tech is good. XOK got another huge bar yesterday. So tech is fine. That's the only thing just literally holding the whole, industrial 8.8% decline. Now this one is near the 200 EMA as well. That's a swing one. I think this market has some weakness to come in next month. It can just buy some time or can make one final push to the upside. Sectors are they're starting to show some weakness. A lot of swings are turning down big time. XLY is okay because this one has Amazon and Netflix. Healthcare, third swing. You got some work to do. Utilities, fourth swing to the downside. It failed after 7 swings for the high. Real estate, failed swing, starting a fourth swing. Then you have second, then you got the third. Consumer staples, these rates are staying up for some time. Consumer staples, failed swing. Now just starting the first because it took out this low. Technology is fine. Industrial, see, number 3, failed in 1. Now you got the 2, then third to the downside. Financials are on 6th. Financials are okay. It's trying to fill that election gap, I believe. The 200 is all the way down here. Financial had a monster run this year. 29% to the upside. That's the second strongest sector this year after communication. Energy killed. 200 EMAs right there. This is the first swing. 15% decline. Energy just smoked. Look at this. It was like literally flat Like 2 days ago, it just kind of got a little bit of a curve. It was like this last 2, 3 days, completely flat. So energy is, yeah, there's the 200 here. You're gonna have a resistance here. This swing right there. That's your support right there. There you go. That's your window right now on energy between 83 and 87. Weave up is sitting right there. 200 here is bearish. Communication. There you go. Starting to pull back. That's what Meta and Netflix is. Communication services. So Meta is going to puke into the second. This is trying to pull into that fourth one. Communication is still strong. It's the strongest sector for the year. It's outperformed semis as well. Communication sector this year. And 200 is down here. So communication is good. Material, full swing down. You see, 200 here. Yeah, these, they're. I mean, how are we gonna buy these ones? The sectors are showing so much of their weakness unless we start to get some crazy reversal back to the upside. You know, sectors are very, very tough read right now, to be honest. I mean, I want to pick some names, but look, but how are we gonna do this? I mean, if we're looking at this nightmare, we just have to wait. That's the only thing I can tell you. I mean, I'll swing trades here, there, but to buy something, I just don't see the right picture yet. I'll see. I watch everything. Okay, so I mean, let's go to the top 10 market weighted stocks. These are the leaders. Okay, they're down. That sector is not going anywhere. Go to utilities. Look at that. Everything is in lagging quadrant. Look at transport. Uber is trying to make a move now. Union Pacific and Uber. Technology services. Look at that. Adobe, the worst one. Let me show this one like this. I just pay attention to where all these are the leaders. Keep that thing in mind. What I did was that I took the top 10 market weighted companies in each sector and put them into all of these stocks are here. These are the leaders. Just remember that. Okay. To the Adobe, Oracle, I mean, they're just some of them are just like kind of behind, but Accenture kind of rallying because of the earnings. And Google is up there. Google is the strongest one right now, based on relative strength. You see, other one is all starting to curve, starting to lose some momentum right there. Retail trades, look at that. Walmart, Costco, this, Lowe's, Home Depot. Target is way up there, but not showing much. Amazon is the last one. You see, the biggest leader always is going to be the very last one, and then after that, it doesn't carry. It doesn't lead the pack. What's the process? Industries right there. Look at this. I like this. Deer should work. I like the setup. So I'm really looking for. You see this momentum right there starting to pick up. It's much stronger than these other three pigs. So I rather setup is the wavecon is good. Just G should be okay. Where we are non-energy material. You see, the point is like when you look at these names, when everything is more all into this lagging quadrant, right? What does that tell you? That's why those sectors are taking such a big hit. And we just went through that one by one. Freeport looks a little bit of a very small. How this chart looks. Oh, got some. There's a double top. There's some resistance right there. Yeah, every time you're gonna take up when you have this huge decline and then you had the bounce, that's your support right there. What the heck is it? Oh, oh man, this is. That's the crazy. Look at this huge dip. Back down. Whoa. 63. 61. I just too much price. So much. I hate stock price action like this. It's so much overlap. You see these swings? Just you need something that travels like this. Well, like clear uptrend. Trend that looks good. Not like in sitting on a roller coaster. So that's non-industrial. You see? I mean, some of these names, yeah, I mean, we can pick some but because these rotation will improve. They're not staying down forever. But you just need to look for the right swing. Finance, look at all these banks. This is just weird month. Weird month. I think most people are losing money this month. Because look at all these names. So where we were, finance, okay, energy material. Look at that. And then electronic technology. There you go. Apple is the beast. That's it. Apple is holding. There's NVIDIA. Lockheed Martin as well here. So we did this. Consumer services. There's your Chipotle, Starbucks, Comcast, Walt Disney, Booking. These are the top weighted stocks here. What is this one? Tesla. Consumer durables is only a Tesla in there. Huh? I categorize this. Yeah, see, it's losing momentum. Communication. It's T-Mobile here. And commercial services. Visa and MasterCard. So these are all the sectors that I've been watching, and I'm trying to see if I could buy something for next year from here. But there's so much weakness to see, you know. I mean, here's one wave count that I'll show you. I don't think. Oh man, it's getting late. You guys just love to listen. Here's my. Here's the thing about S&P. Where we are, that's the debate right now. This is the bear market low. I think I left it. I need to complete. It's a bear market low. This is a wave one, down into. And then if we do a 3 versus 1 from here, forget about all the internal waves. Is right there. So the typical So 61.8 here, 200 here, 261.8 is here. So now from this 3, which is we talking about this blue 3, 1, 2, 3. We need to find 5 brown waves, one of these, to fit in this 3. So it is the 3 end here. So if this 3 ends here, you're gonna move this 3rd here, 4th here, 5th here, put a 3rd here. You can do this. Now, you have to look at this. When every time when you look at the wave count, where is the largest percentage decline that you have on that trend? This, this. These are only 2 corrections you have, right? This one, and this one. That's all we had. So every time when you had a correction and the price end up making a higher high, right? There's going to be always going to be a 3-wave correction. So you have huge decline, price break above 5607, which is right there. Uptrend continues. Same thing here. You just need to take out the largest percentage decline, focus on this high, and then we'll see if the high has been taken out. Now the continuation starts. That's how the trend resumes after correction. After correction happens where? 2 and 4. Then we go up in what? Always 5 waves, right? So we can do this. So from here, now to make a case for this wave 3 near this 261.8 from here, that's your wave 3. That's your 4 because that's where you have your largest correction down to August lows, right? Which was 9.7%. So the wave 4 here, right to that 23.6. So from here, now we have this wave 5. So we need to complete 1, 2, within a 1, 2, 3, 4, 5. So here's your wave 4. So now what people are doing right now, okay, you can just put an ABC here, like this. So now you can draw a channel. A channel is you connect 2 and 4 lows and you project it up to the top. Okay. So instead of doing, I'll let it do this way. Take this wave 2 to 4. Forget about this overthrow for now. Oh boy, I'm gonna need to make it extend a little bit more like this. Wave 2 and 4, and then project the parallel line. Put it right to the top of this wave 1, right there. That's where that's what the high of the trend wave was. That's your 2. Take out this high of one here to this. So this channel there's, now leave it like this.
Sometimes I've seen you put the top of the channel from wave 3.
You can, yeah, you can, but I mean, let me finish what I'm trying to show you here now. This is gonna get really interesting now. I had it, I don't know, I think I've been playing around with it a little bit more. I guess it just went through. You can do it like this, project it right to the top of the 3. So you connect two and four with three. So it gives you still a bit of a window. Now here's a tricky part. Now let's focus on this part. This is August low right there, right? Now, I have this thing here. So if this is a 3 and 4 and this is 5, okay, let's do 5 versus 1, 6,000. So we're going to run some fibs here, some relationship, stack them up, just do this one. Hang on. So for this fifth wave, it has to pair with this leading diagonal right there. Okay. And it's definitely extended wave. Remember, we talked about diagonal one will have an extended fifth. Okay. Now, how are you going to count 5 waves? And this is what most people are doing right now. They're making an ending diagonal like this. Everywhere you're going to go, I don't really care much who's doing what. Here, this is what people have. This fourth wave, okay, it's not a it has to enter the price of this high. You see, in a diagonal, waveform must enter the price territory of wave 1. But nobody is able to understand this. That's one thing. Because everybody wants to put through two converging lines like this and thinking that this is the end of the world. You breaking a rule. You breaking a rule and you think that's going to work for you? I don't think so. The only other way this thing is going to work, and I have to work like this. You have to make this thing a running flat. Let me fix it for now. If you make this thing a running flat, now you can fit a diagonal. Now you have an overlap. This will work. This decline that we just had this week exactly went to the prior wave 4. That's a typical downside target for a diagonal, is a wave 4. Okay? And diagonals always have a very sharp reversal to the downside. And we saw it this week. It had this decline that we just had. So it does define the diagonal here for sure. But now the question is, can this diagonal can open more, okay, to the upside? Because that's the only way this thing can work. You cannot put wave 4 here. Okay, when it comes to Elliott, you're gonna follow rules. You're not gonna follow rules. I'm gonna get you. So if this is the case, this is fine. You can do this. Okay. This is some sort of a complex. This is, you have to make this as a running flat. This is totally fine. C versus B close near the 50% retracement. So from here you can do this. That I can accept this one. But if this is the case, this is coming next quarter. So your typical your downside 2 versus 1 is a 53.47. Okay. So the 53.47, that is the external retracement now of 23.6 from this low. So, and then your 38.2 is at near this 49.29. To this, you basically wiping off the entire move down to August lows. So you are looking from a closing price 9.76, close to 10%, and then the 10% down to, what is this, 20%. Yeah, if that is going to happen, it's going to start a bear market. So we don't want that. I'd rather just stop here, somewhere around here, and then just make a move back up. This is going to start the bear market, breaking below this 49.29 mark. So you're going to have a little bit more decline to come if that's going to be the case. So we're not going to do, I cannot put anything down here unless we break the channel. That is going to give you the confirmation of that. You need to break that channel somehow, you know? We don't have that. This is the one case you can do that. A second case you can make, okay, is to open up the same range back and forth to the upside. Like this. So this is doable. Like this. So you just look for one push to the upside. This leads to this count that I'm following. I had this thing labeled, but the problem is, here's the thing about diagonal. They're very difficult and very tricky. Okay? A leading diagonal, wave 3 is shorter than wave 1. Okay? In ending diagonal, wave 3 is bigger than wave 1. Okay? That's the problem. This is shorter because 3 versus 1 is 61.93. Look where the 3 stopped for this decline. This is a very tricky price action on S&P. Qs are good. I like the Qs. Couple of guys are asking me, Mo, post this thing, post. I'm just not gonna post this, like, you know, update on SPX, and I'm just not doing it. I mean, I was like, what is the point for me to show you one thing and the second day is show you something? You have to look what I show you here, then you will know exactly what's going on. I try to make this thing here. You see, I put the 4 here instead of the August low. You see this wave 3 for this is a shorter wave. I know that this is not right. Okay, wave 3 in the ending diagonal has to be bigger than wave 1. Leading diagonal is shorter. You see, the system is screaming at me. The wave 3 is the shortest wave. Now the question is, like, how do you get this thing? Either we if I do no, this has to either, but this just too this wave one is just too small. If you wanna get if you wanna measure this move from 2 to 3, it's gonna put you right there. Okay. This is the minimum upside you need to get into the and if you want to make a case for a diagonal. And then from here, you need 4 to overlap 1 with 58, 78 high. This is exactly where the price is kind of like messing around. You see like how many lows, how much demand is sitting here. Here, you see like how many retest of this. Look at this low. If something is up with this 59 level, the price is keep coming back to this price over and over again. This area you gotta watch really, really close. Okay. These are all daily bars. So it's a lot of action going on here. So if this is the case, then you just gotta have to look for some sort of an expanding variety diagonal, meaning that is gonna have some sort of like a wild moves back and forth. That will spike the volatility as well, meaning the volatility expands and then it contracts, then expands, then so the volatility makes a round back and forth. I mean, we just want to give a simple look, not to keep it as the what do you have? Well, I have you go to the education thing, you can see the PowerPoint presentation over there. You just read that. It has everything. First
Oh,
you first you need to read a book. Don't look for these cheat sheets and these shortcuts. Nobody's
yeah,
gonna nobody's gonna learn anything from the by looking at 2 Google images. Read the book.
sure. Thank you, Mo.
Um, if we put the four wave, if I put a fourth back here to August lows, now making a case like this, okay, is challenging as well. Okay. Now we take the August low. That's your one. That's your two. Here goes your three. Doesn't get to the 61.8, but at least it went up above 100. But the problem here is how you gonna count 5 here? Okay, you need clean 5 within a 3. Yes, it exceeds above 100. I can see that. But where is does it look right? No, this is not right. You need 5 waves within that 3. So this thing doesn't work. The only thing that but how much extension that you can get toward this one? That's the debate. How much it can extend, because right now, if you just take the bear market low to this high was 17.44%. If you take 17.4 against this is at 19. I mean, it's close, super close, right? So the relationship of time is basically has met, which I showed you, the 5 versus 1. It's just a matter of like this overlap. Okay. It's very messy. It will adjust. I will adjust it. I know things. I know this thing for a fact. Okay. If I cannot label a wave count, nobody can nobody can label in the world. I can guarantee you that. But it's just too much overlap. So if we put 3 here, that's just fine. But how are we gonna count 5 here? I'm missing 1. If I can make a 4 here to 5, where's 2? There's no wave 2. It just looks 1, 2. Then did you have these kind of overlap? This price is definitely starting to give me signs of some sort of a diagonal might is in play here, because it has a lot of overlaps now. You know, the only way, as I said, is to make this thing work. You're gonna have to make this thing running. Nobody has this. I know that. Nobody has this thing on the running fly, because everybody trying to count from here doesn't want to follow the rules and thinking like, yeah, this is the diagonal. No, it's not. If this is a diagonal, we're gonna do it right by keeping it this way, and then we're gonna have to see. Now if we keep 4 here, now the 5 versus 1 relationship goes to 63-49. So a lot of people right now have a target of 63. Tom Lee came up with like 6,300. There you go. Yeah, you got your 6,300 by doing this. Now this gives you, instead of count the same move that we just counted, the same measured move that you're looking for, that 17-18%, instead of looking from here, you have to turn this thing into a running flat, and then you have to measure the same move from here to here. It's going to give you the same 17 point whatever the 98 was. There you go, 17.50. That's a 100%. That's what they call 5 versus 1. It's going to be to the penny. I know that. So this is the only way you can do. Now the question is, this is coming. You gotta be mentally ready for this. This is coming. So this Trump administration that is coming right now, he's gonna get a recession. They're gonna make the case here for the recession. I have a very good feeling about it, because there's no other way, unless I can we open up this count more. That is another way to do that as well. I mean, that's what I was, is to open up this thing more like this. You put a 4 here and 3 is this. So you just still stay in this blue 3. Okay. So if you do this, you have a wave 1, 2. Look where the 3 is. Perfect. This is textbook right there. 3 versus 1 relationship. But everybody wants to make that 3 here. I'd rather keep it this way, because I'm trying to see if I can make this thing work this way. That'll be much better. Now you have this wave 4. Almost close to a 100% relation, because this is a triple zigzag. Then we can do 4 versus 3. There you go. So that's your typical retracement of 4 versus 2 and 3 against the 3. So from here, if we do wave 3, it's going to exceed a little bit more to this 261 compared to this 1 point, the 1 2, which is okay, because this third is much bigger. Because, and from here, we deal with this only wave 4 next year or so. That will pair with this one. And then you get the push right there in 5. This is another way to do it. So now the question is, you're still dealing with this 5th wave. How are you going to close this 5th wave? Now, if you says like, okay, if this is a wave 2, this is a wave 4, okay, like this. So you have 1, 2, 1, 2, 3, 4, 5. So if we do this 5 versus 1 relationship, 6192. This. So the distance traveled here in 1 is the same exact measure move of this. So then we deal with this wave 4. In this zone like this. Then you get one more push back here to the upside in wave 5. I mean, it looks right. See, I can always open the upside. That's not a problem. But the only challenge right now is this price a lot of overlaps. You see all this, there's another way to do it this way. But instead of keeping this 3 here and then 4, then 5, move this blue 3 here and then 4 to make either here or a running. You know what I'm doing. I hope you understand it's mess. It is a mess. Okay. Guys, I talk to Alec all the time and everybody knows that. The guys who does really like been doing Elliott for a long time, they all know that S&P is a mess. The only clean Elliott wave count that you can possibly find is the Qs. Okay? This one. It's one of the most beautiful, clean looking wave count ever out there. This one. Just it's beautiful. Look at that wave 1, down in 2, up in 3, right to that 261.8. Look at that time relationship. Just, this is a one of a kind wave count. Look at that, 261.8. Look at that time relationship of 6 right there. 366. The high was 408. That's where we started a bear market in wave 4. Here's your 2020 October 22 lows. This is the beauty of an Elliott wave, right there in front of you. Clean looking wave count. Just you don't really come across them much, but I had this thing up from 312. It's where we kind of broke this channel. 312, I've been posting this thing on a Twitter. That's like, come on, you gotta break this high right there. Anyways, the peak to trough decline that we had, which is this 408 level. Now we're at 520. So if we take this wave 1, wave 2, measured move was 522. So we already hit it. So the typical upside for 3 versus 1 is 678. It's right up here. Then you deal with some sort of a 4th wave and then get the 5th wave. It has room to run. And look at the channel that is going on. But again, these are monthly bars. So the sell-off that happened, can you even see it here? No, you don't. You see like what the bigger time frame will do when you look at it like, whoa, that was a sell-off of 1,000 points? Really? I mean, just it's very different. Like here's COVID right there, from here to here, and that was a crash. And look, what does it look like? Does it look like a crash? Well, yeah, there's some wild, swings here and stuff, but the point is that Elliott works really good on a bigger time frame, like weeklies and monthlies and stuff. But to make a case out of those 1 hour charts and stuff, that makes it a little bit tricky. Um, the cues are good, but this is a mess. Seriously, I know that I will fix it, but I just need a little bit more price, some more price clarity. It just price just having too much of an overlap. Three, four.
Well, I added like my SPX chart on an hourly time frame. Can you take a look to see if that makes sense?
Where?
In the community chart, I'm just trying to see if that's a possibility. I mean, yeah, that one.
Oh, you want to even open a way more. I mean, this is okay, but your wave two is very small compared to this. This is huge. You have a log scale on, right?
Let me check. No, no, I don't have log on.
Turn the log scale on. Never do LA without a log scale.
Okay, let me check.
I can tell because the range gets so damn. I was like, something is not right with that chart. It looks too big. So, I mean, there's ways to open it. I mean, it's just if this is a fifth wave, yeah, well, we can do this. That's all it. But I just don't. I don't making the fourth wave like this. I'll put it here, and then this damn third is gonna get. I have an overlap, which is fine, which I'm trying to play around here. That's exactly what I've been doing, just to kind of see if I could kind of like. This is a 2 hour chart, is to see if I can get more some upside. But look how this thing looks now compared to the cues that I just did before. You see, same August lows. You see the overlap. 1 2. I'm doing 1 2 1 2. This one is doing really good. So either we just stay sideways just to end the year, or the people who are expecting for the big Santa rally, whatever, is to see if we can make another high above 529 to see if we can do this 3 versus 1. That would be the move. The if price starting to rally from here um, to end the year is for this tech to make a push. Looking at the rotation there now, we just looked at it. They're all starting to lose momentum on these big names, except for the Google one is the one is standing tall. But the only one that is trying to make a move up is Nvidia. So the Mag 7, which just recently had a wild run, as we all know, the one by one the stocks were just like making new highs and stuff. So Apple is a strong leader, right? So one Apple, and then the other ones, if it's starting to lose momentum, but then they have Nvidia that's starting to pick up. So if Apple stays up and then Nvidia pick up the pace from behind, I mean, I think this is doable. Okay. So if Qs wouldn't be able to make a move back up because we have a weave up sitting over there and we have a high right there, we just either end the year like this, because this is quite a bit of time. This is more directional in one shot, So you got some time to chew. And we're gonna run out of time because the Santa is coming. So that's the plan. I laid it out there. It's like, okay, this is the case. This says your hard invalidation right there. That's your top right there. So that's going to be a major support at 503. 498, that's the invalidation point. 4 doesn't want to get below here. And to see if we can get a 5 push back up there. So 3 versus 1 is good. It's not short. It's perfect. We just need to get to this 3 versus 1. We can do 3 versus 2 as well. Same thing. Right, kind of right to this zone. So this is doable. Doable? Well, I don't know. We trade with probabilities. There's no such thing guaranteed, or I'm gonna tell you it's gonna happen. This one, see, I have them as a 1, 2, 1, 2. Yeah, this one. And I cannot make this thing as a diagonal because it's a shorter. I know that. See, if the system is telling me that you break in the rule, this is motive wave that why would you sit and force your labels? That's the only thing. I mean, the only thing I can do is just to go like this. I can't make the, I mean, you can, boy, that fifth is gonna be super, I mean, it could go by doing this. I mean, if you see a third wave is, this move is so clear, 5-way move. Something like this. 38.2. And then from here, you count 5 to the upside. That's just another way to do it. Because making this as a diagonal, no way. I'm not gonna entertain. I'm just now. S&P has to take a break. To be honest, I'm just not gonna post anything. I want to post something that makes sense. Yeah, a couple people like yesterday, I posted that thing as like I normally do like a end of the week recaps and stuff. Like, can you do S&P? I was like, no, I'm not doing S&P. There's no point to just to throw stupid, goofy looking charts, and if it doesn't make any sense. The guy who just showed yesterday this, I have. Let me stop this coding. I have never